Welcome to Free Advice Guy. Alright, I'm gonna have to do something here before we really get into it. Sorry, just checking the status of these reports. TikTok banned or restricted me for a while. That's weird. This is interesting. show my wife. Be right back. One sec, chat. Which one? All right. Everything handled with TikTok. Now let's take a look. U.S. market's down a little bit today. Even gold. Still got some big winners for the day. Merck had a 52-week low. Let's check these other ones. European markets down. Check out the Asian markets, also down. And cryptocurrencies. Alrighty. Let's check out some Yahoo Finance. See if they talk about why the Tesla. sec. Get an emergency fund. If you don't have one, this lump sum of money, then we look at investing in money. You just have to go back through the 5 steps of financial. What's the best way to save this money? Start retirement savings, invest. If you come if you come into a decent lump sum of money, you just have to go back through the 5 steps of financial success to see how this applies. Go through your budget, go through your emergency fund, reassess your goals, then we look at investing in savings, and this is actually navigate and for begin. So from here, reassess your budget, where every dollar is coming and going. Get an emergency fund. If you don't have one, this lump sum of money can go towards that emergency fund, possibly paying off debts. But then what you need to do is come up with a goal, a specific dollar amount, time horizon, and risk tolerance for this money. Once you have those 3 things set out, you can then begin investing and saving towards that goal at an allocation and in investments that make sense based on your time horizon and risk tolerance, and that will help you achieve your goals. All right, let's create a clip. Can go towards that start retirement savings, invest. If you come into a decent lump sum of money, you just have to go back through the 5 steps of financial success to see how this applies to you. Go through your budget, go through your emergency fund, reassess your goals, then we look at investing in savings, and this is actually navigate and for begin. So from here, reassess your budget, where every dollar is coming and going. Get an emergency fund. If you don't have one, this lump sum of money can go towards that emergency fund, possibly paying off debts. But then what you need to do is come up with a goal, a specific dollar amount, time horizon, and risk tolerance for this money. Once you have those 3 things set out, you can then begin investing and saving towards that goal at an allocation and in investments that make sense based on your time horizon and risk tolerance, and that will help you achieve your goals. Risk tolerance, and that will help you achieve your goals. If you come into a decent lump sum. All right, clip number 1. Know where it's going. An emergency fund. I like 12 months of legit emergency fund. Goal financial success. Yo, what's up, Snarly? Your life, and you'll be in I'm making clips. If you're turning 18 and you want to be smart with money, that's awesome. That's a great first start. You just need to go through the 5 steps of financial success and throughout your life, and you'll be in a good position to achieve financial success. So the 5 steps to financial success are begin, budget, emergency fund, goals, investing and saving, and navigating as your life changes. So establish your budget, every dollar in, every dollar set up specific goals with dollar amounts, time horizon, and risk tolerances
How did
from
I was
there
off
you begin
yesterday, Snarly? How
investing
was
and
your
saving
Wednesday?
towards those goals. And as your life changes, you're going to navigate those changes. So you get a pay increase, a different job, you lose your job, your goals change, things like that. You just need to navigate and update that. If you stay on top of the 5 steps to financial success, especially starting as an 18-year-old, you're going to set yourself up very well for financial success in the future.
Boom. Clip.
Dollar amounts, you're going to navigate those changes. Job, your goals change, things like that. You just need to navigate and update that. If you stay on top of the 5 steps to financial success, especially starting as an 18-year-old, you're going to set yourself up very well for financial success in the future. Very well for financial success in the future with dollar for financial success in the future with dollar amounts. Financial success are begin. You just need to go through the 5 steps of financial success
Oh man, this is a long
throughout
one.
your life, and you'll be in a good. If you're turning 18 and you want to be smart with money, that's awesome. That's a great first start.
Portfolios are rough today. Markets are all down.
If you're turning 18 and you if you're turning 18 and you want to be smart with money, that's awesome. That's a great first start. You just need to go through the 5 steps of financial success and throughout your life, and you'll be in a good position to achieve financial success. So the 5 steps to financial success are begin, budget, emergency fund, goals, investing and saving, and navigating as your life changes. So establish your budget, every dollar in, every dollar out, know where it's going. An emergency fund. I like 12 months of basic living expenses set aside. You can do more or less depending on your nature. And then you need to set up specific goals with dollar
Uh,
amounts, time
I mean,
horizon, and risk tolerances.
you got to
From
think
there, you
about.
begin.
So let's pause on buying and selling first. So you got to think about what your goal is, right? So if this is long term money and you're investing for 20, 30 years out, and the market goes down, you could sort of look at any down day in the market as a time to buy if you think the market's going to be up. But realistically, it's always a time to buy if you think the market's going to be up 10 to 20 years from now.
Investing in savings towards those goals. And as your life changes, you're going to navigate those changes. So you get a pay increase, a different job, you lose your job, your goals change, things like that. You just need to navigate and update that. Steps to financial success are begin, budget, emergency fund, goals, investing and saving, and navigating as your life changes. So establish your budget, every dollar in, every dollar out, know where it's going. An emergency fund. I like 12 months of basic living expenses set aside. You can do more or less depending on your nature. And then you need to set up specific goals with dollar amounts, time horizon, and risk tolerances. From there, you begin investing in savings towards those goals. And as your life changes, you're going to navigate those changes.
But
So
today's not a
you get a
huge
pay
drop,
increase,
so
a
you got to
different
think about
job,
that
you
too.
lose your job, achieve financial success. So the 5 steps to financial success are begin, budget, emergency fund, goals, investing and saving, and navigating as your life changes. So establish your budget, investing and saving, and navigating as your life changes. So establish your into a single family house, rent or sell my condo, and why. A lot of this comes down to simply whether or not you want to be a landlord. There are people who will build real estate empires and have a ton of real estate that they rent out, sell, whatever they're going to do with the real estate, and they enjoy that life. Then there's somebody like me. I do not enjoy being a landlord, so I try to stay away from that. You need to figure out if you want to be on the hook for somebody calling you at midnight because the water heater busted or the AC went somebody to manage your properties for you, but you're going to be losing some of that profit for them to manage it. So just consider, do you want the extra stress of being a landlord, or do you want to take that money from a previous home and do something else with it?
All right. Next clip. I was thinking about the advice you gave me before and had a question. Through some other research, I stumbled across the three fund method and was thinking to construct my portfolio at roughly 50% S&P, 30% growth ETF, and 20% foreign ETF. So the main issue you run into with this is the S&P and growth funds will overlap each other. Okay, I'll wait.
Landlord, or do you want to take that money from a previous home and do something else with it? Previous home and do something else with it. From that, you need to figure out if you are people who will.
All right, it's supposed to be less than a minute.
Moved out of my condo into a single family house, rent or sell my condo and out of my condo and moved out of my condo into a single family house, rent or sell my condo and why. A lot of this comes down to simply whether or not you want to be a landlord. There are people who will build real estate empires.
Let me know when you're back, Snarly.
Of real estate that they rent out, sell, whatever they're going to do with the real estate, and they enjoy that life. Then there's somebody like me.
Are you back, Snarly? Ads are done. All right, take a look at this, Snarly. So when we take a look at VU, and then I just pulled up a growth ETF here, the Vanguard Growth ETF. So if you take a look at these, well, we'll just go through this, take a look at a couple of things. Let's go to largest holdings. This is what you run into here, Snarly. If you do a S&P 500 and a growth fund, you are going to have a lot of duplication within your portfolio. A lot of it towards large cap funds. So that's just something you want to be mindful of. I'm not telling you to do it or not do it, but you're going to have a lot of duplication here in these very specific funds. Because like if you look at this, where is it? Equity? Yeah. So I would bet that most of these are inside of this. So you have two ways that could go, Snarly. If those portions of the market outperform the overall market, you'll be very happy you made this move. But if mid and small cap stocks outperform, you will not be happy that you were in this portfolio. So you just need to think about that.
I do not enjoy being a landlord, so I try to stay away from that. You need to figure out if you want to be on the hook for somebody calling you at midnight because the water heater busted or the AC went out or something like that. Being a landlord can mean a decent amount of money, but it also means a lot of responsibility. You can get somebody to manage your properties for you, but you're going to be losing some of that profit for them to manage it. So just consider, do you want the extra stress of being a landlord, or do you want to take that money from a previous home and do something else with it? Moved out of my condo into a single family house, rent or sell my condo and why. A lot of this comes down to simply whether or not you want to be a landlord. Comes down to why. A lot of this comes down to simply whether or not you want to be a landlord.
So it could be bad, it could not be bad, Snarly. If it all depends on how you look at it. If your portfolio grows more, you'll be happy you did it. But if it doesn't, then you'll wish you had gotten into other pieces of the market. It's all just dependent on you.
Rent out, sell, whatever they're going to do with the real estate, and they enjoy that life. Then there's somebody like me. I do not enjoy being a landlord, so I try to stay away from that. You need to figure out if you want to be on the hook for somebody calling you at midnight.
Well, there's always
water heater busted or the AC went out.
like,
or something
all
like
right.
that.
So check this out. How many years until you retire, Snarly? We're gonna have some fun on this stream.
Being a landlord can mean a decent amount.
Ghosts
of
of Investment
also comes
Past.
a lot of responsibility. You can get somebody to manage your properties for you. You're going to be losing some of that profit for them to manage it. So just consider: do you want the extra stress of being a landlord, or do you want to take that money from a previous home and do something else with it? A lot of this comes.
All you got to do is give me the amount of years, say 30 years, or the year you want to retire. Either way, we'll do it. But we're going to have some fun.
2.5 years of starting college. I'm wondering if we should reallocate 529 funds away from
40 years. All right, so let's take a look. That would be 1984. Top stocks in 1984. State figures and winners and losers. All right, we're going to take a look at a few of these. Let's go. All right, so this is 1984. So look at all these energy companies. This is where it comes from, Snarly. Exxon, GM, Mobil. Now they're combined. Ford, IBM, Texaco. That's a lot of energy stuff in here. Wow, this is crazy. Look at these oil companies. Sonoco, Conoco, Marathon, Shell, Gulf, Chevron. Anyway, if you look at these, some of these are still there, but some of these are not. 40 years is a long time for things to change in the market. Lowe's, Gap. These were the top performing, according to StatMuse, best performing stocks of 1984. Do you know what Prague is? Textron, Seneca Foods, First Source. Right, like these are the sort of things that seem unbeatable right now, over a long enough time have a chance to not exist. I was looking for a... That's not what I'm looking for. So the best performing stocks over the 15 years from 84 to 99. So this is now in the 50 cent to 365 range. So it was the best performing stock for 15 or over a 15-year period. Not even close. Aegon, Worksport. So 100%. That's sort of what these things are showing, is that, let's go back to the first one. So this was the S&P 500 in 84. Some of these are still here, but some of them got switched out. Historically, small and mid-cap stocks have outperformed large-cap stocks. But over the last, 12 years, it's been large-cap stocks. It is a dynamic list, yes. So the issue is, though, right, to get into the 500 index fund, a company had to start down here and work its way up. And then you buy it once it becomes one of the 500 largest companies. So historically, companies will leave the 500 index, join the 500 index, right? But you're just owning them while they're up there. as opposed to when you own small and mid cap, you own them until they become large cap, if that makes sense.
On funds. Generally, the answer is yes. It all depends on your stomach and risk tolerance and your stomach for market movements. If the markets continue going up, you'll be happy you stayed in a 100% stock portfolio and you got to see that growth in the 529. But if the market tanks and it's going to need time to recover, but you need this money to pay for school and it's not there, you will consider this a gigantic mistake. So just consider your pros and cons. This person says they have all the funds to pay for 4 years of schooling, so I'm not sure why they would take the additional risk. But you need to factor in all of these things before changing investments in your 529 or really any investment account for that matter. Time to recover, but you need this money to pay for school, and this person says they have all the funds to pay for 4 years of schooling, so I'm not sure why they would take the additional risk. But you need to factor in all of these things before changing investments in your 529 or really any investment account for that matter.
For example, than large and growth. Yes. So like this is where VTI comes in. Okay, hold on. I'm gonna say yes, Gnarly, and then cover something else. So yes, with the like VTI, you own large cap, mid cap, and small cap. The VTI is still like 80% S&P 500 index fund, but you have 20% mid and small cap. So the thing is, it's possible that a 500 index fund and a growth fund will outperform the total market. It just depends on which parts of the market perform best over the next 40 years. We don't know that. So I would rather own the entire market because I simply don't know.
Investments in your 529 or really any investment account for that matter. Investment account for that matter. And it's going to need really any investment account for that matter. And it's going to need time. My oldest is within 2.5 years of starting college. I am wondering if we should reallocate 529 funds away from stock funds. Generally, the answer is yes. It all depends on your stomach and risk tolerance and your stomach for market movements. If the markets continue going up, you'll be happy you stayed in a 100% stock portfolio and you got to see that growth in the 529. But if the market tanks and it's going to need time to recover, but you need this money to pay for school and it's not there, you will consider
like to go even further, Snarly. This is where, right, like if you own one stock, if you had owned, I don't know, let's call it Apple since 1984, just that one stock, you might have outperformed the entire stock market. But if you owned Blockbuster, then you're broke. You know what I mean? Like that's where the diversification comes from. Going back 20 years, knowing what's going to be successful 20 years from that date, you really have no way of knowing. It's impossible. So you just want to own everything. And then you ride the wave no matter what. But it is definitely possible by taking on a growth fund and a 500 index fund, you are taking on more risk. With that risk, you may get more reward, but you may also lose more money, right? It's back and forth.
gigantic is within 2.5 years of start. An investment question. Now that my oldest is within 2.5 years of starting college, I am wondering if we. Now that my oldest is. Now that my oldest is within. Now that my oldest is within 2.5 years of starting college, I am wondering if we should reallocate 529 funds away from stock funds. Generally, the answer is yes. It all depends on your stomach and risk tolerance and your stomach for market movements. If the markets continue going up, you'll be happy you stayed in a 100% stock portfolio and you got to see that growth in the 529. But if the market tanks and it's going to need time to recover, but you need this money to pay for school and it's not there, you will consider this a gigantic mistake. So just consider your pros and cons. This person says they have all the funds to pay for 4 years of schooling, so I'm not sure why they would take the additional risk. But you need to factor in all of these things before changing investments in your 529
or really any investment account for that matter. Now that my oldest is Brad, I don't know if you're there, but I wasn't able to download. Simplify things and put a hypothetical number on it. Choosing VU or VTI would be like shooting for a 125% gain if the large cap does well, but possibly ending with 75%, while choosing VTI would be similar to settling with 100% regardless. That's actually a really great explanation, Snarly. Yes. If you just invest in the total market, you're doing what the overall market does and you're locking in. So you're good. But yeah, that's actually a really good way to look at it. If it outperforms, maybe you do 125% of what the overall market does. But if it underperforms, maybe you do 75% of what the overall market does. That's a really good way to look at it, Snarly. Yes. So if you do VU and VUG, maybe you get 125% compared to the whole market. But maybe you get 75% or anywhere in between there. I really like that, Snarly. That's a really good way to simplify it. Your money. It's debt. It's someone else's money that you would be spending, and now you take cash when you have a HELOC. Assuming a significant amount of cash is your emergency fund, absolutely you should keep it. A HELOC isn't your money. It's debt. It's someone else's money that you would be spending, and now you would owe interest on it. Yeah, I'm actually, hey, Snarly, for real, I'm really impressed. Most people don't make that jump that quickly and don't simplify it in their mind that fast. You being able to connect those things, and honestly, if you take that mentality towards all of your investing, you'll start to understand where I'm coming from. The total stock market has, continuously gone up over time. Certain pieces of the market over certain periods of time have outperformed. So you just have to understand that. So anytime you go outside of a total market index fund, you're adding risk by adding more portfolio concentration in whatever area that is. It may work out for you, and you may be happy you did it, but it may also hurt you, and you won't be happy. Emergency. Why would you want to compound that emergency by taking on debt that you're now going to owe interest on, and there's a clock ticking on you having to pay this back? An emergency fund is to help give you peace of mind. So if you ever lose your job or something catastrophic happens, you have cash sitting to the side, and you can pull money from that without having to touch your investments or debts, and you can have peace of mind knowing you're not putting yourself in a worse financial position should an emergency. So then I assume picking a sector ETF. Yes, sir. You are 100% correct. Right? So if you think technology is going to do well, so you buy some more technology, and like that logically seems like a good bet, right? I don't think technology's going anywhere. Technology is going to lead us into the future, right? So hey, it could get you more returns, but you are taking more risk that if the technology sector underperforms, then you'll miss out on returns. By taking on debt of mind. So if you ever decide, and you can pull money from that without having to touch your investments or debts, and you can have peace of mind knowing you're not putting yourself in a worse financial position should an emergency happen. Should an emergency happen. See, by any reason to hold on to significant amounts of cash when you have a HELOC? Assuming a significant amount of cash is your emergency fund, absolutely you should keep it. A HELOC isn't your money.
It's debt. Any reason to hold on to significant any reason to any reason to hold on to
One other thing I'm trying to compartmentalize is if I were to buy 50% VU and 50% VTI, for example, would that just be skewing my portfolio? Yep, 100%. Yeah, so 100% of VU is large cap, right? So 50% of your portfolio is guaranteed locked in large cap. And then 80% of VTI is large cap. So 80% of the other 50% is large cap. So now that's 40%. So you'd now be at 90% large cap, 10% mid and small cap.
to significant amounts of cash when you have a HELOC? Any reason to hold on to significant amounts of cash when you have a HELOC? Assuming the significant amount of cash is your emergency fund, absolutely you should keep it. A HELOC isn't your money. It's debt. It's someone else's money that you would be spending, and now you would owe interest on it. If you're an emergency, why would you want to compound that emergency by taking on debt that you're now going to owe interest on, and there's a clock ticking on you having to pay this back? An emergency fund is to help give you peace of mind. So if you ever lose your job or something catastrophic.
Also, Snarly, you can ask as many questions as you want, as often as you want. This is honestly all I want to do here. So if you got 1,000 questions, I'd be happy to answer them.
Worse financial position should an emergency happen. Any reason to hold on to significant amounts of cash when you have a HELOC? Assuming the significant amount of cash.
That states whether VU or VTI has done better. Let's see here. Total stock versus 500 index fund historical returns. The problem is a lot of these do like the last 15 years. Yeah, let them fly. Let's see here. So this is not great, but from 1928 to 2023, the 500 index fund averaged 9.9%. And from 57 to 23, it's 10.26%. I want a comparison. That is not it. Years. I want to compare it. I don't see one that compares. Yeah, this is what I'm worried about. They all go over the last like 10 years. I want to see longer. Looks like I can't find anything specific here, Snarly. You think that would be easier? So we can do something like this. Vanguard. Where is... All right, let's do total stock market index fund. Problem is, let's see when this inception was. 2000. That doesn't help either. I don't have something great for you, Snarly, but generally, or over the last like 10 to 12 years, the 500 index fund has outperformed the total stock market. Hey, what's up, Harley? Welcome to the channel. I apologize for not seeing your message until now. But yeah, the total stock market index fund historically has outperformed, but over the last like 12 years or so, it's been the 500 index fund. So. Alrighty. I'll quit going down that path. Sorry, man.
Is that pretty girl monstrous?
Oh, up a
Income tax bracket. They might be looking at, because they're 35, they're going to owe a 10% early remittance, but there's not enough $10,000 out of their 401k.
I think this was a non-clip.
This is a good decision. And what the tax implications are. Generally, I wouldn't recommend this, but there's not enough detail here to actually make a firm recommendation. As for the 10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty, and that income will be added to their income tax list for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. Early withdrawal. They might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k.
Yep, that makes total sense, Charlie. It's a good way to do it. Hey, and just to be clear with you,
Money out of the 401k.
let me get this.
To talk about whether or not to take money out of the 401k. We're going to owe a 10% early
All right.
withdrawal.
I doubt you're going to be too upset. Oh, man. I think you just got an ad. But I doubt you're going to be too upset with either of them. The performance difference over a long period of time, while will actually mean real dollars and cents, I doubt that will be what makes or breaks you financially.
Penalty scale if we're going to talk about whether or not to take money out of the 401k. We're going to owe a 10% early. Look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. This person is 35 years old and thinking about this person is 35 years old and thinking about taking $10,000 out of their 401k and is wondering if this is a good decision and what the tax implications are. Generally, I wouldn't recommend this, but there's not enough detail here to actually make a firm recommendation. As for the $10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty, and that income will be added to their income taxes for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. This person is 35 years old and thinking about taking $10,000 out of their 401k and is wondering if this is a good decision and what the tax implications are. Generally, I wouldn't recommend this, but there's not enough detail here to actually make a firm recommendation. As for the $10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty.
I think I'm going to switch the clip to here.
Added to their income taxes for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money,
welcome back.
Somewhere other than 401k.
Yeah, so regardless of what you pick, Snarly, you're probably not going to be upset. I don't know if you're necessarily flipping a coin, but if you're thinking 30 years from now, it's impossible to know if the S&P or the total stock market's going to perform better. They're both probably going to perform well over a 30 or 40 year period. And there might be a 1 to 2% performance difference. And over the long period of time, that actually matters a lot. But you're probably going to not be too upset either way.
Okay, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k to actually make a firm recommendation. As for the $10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty, and that income will be added to their income taxes for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. As for the $10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty, and that income will be added to their income taxes for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. As for the $10,000 they pull out of their 401k, because they're 35, they're going to owe a 10% early withdrawal penalty, and that income will be added to their income taxes for the year. So if they're in a high income tax bracket, they might be looking at 30-something% off the top before they get to spend any of it. So if you can and you need money, try to look somewhere other than your 401k, but we definitely need more detail if we're going to talk about whether or not to take money out of the 401k. As for the $10,000,
boom, another clip. Expense ratio, very much. Expenses are one of the very few things you can control. Now, when you're looking at like a 500 index fund or a total stock market fund, Vanguard and pretty much every company out there now offers a low cost. But the main thing is, if you can get a 500 index fund for 4 basis points or 5 basis points, or you can get the same fund from another company at 10 basis points, 5 basis points isn't huge, but over the course of 40 years, we're talking thousands of dollars.
We are at the side. Car loan can go towards, that's what I'm talking about. I have a follow-up question for you, those.
SPLG for the S&P if I remember. Okay, so you got to compare specific funds. If you found an S&P for 0.02, you want to compare that to other S&Ps. Not necessarily the VTI, because VTI has thousands more stocks in it than the S&P. So you'd want to compare apples to apples and oranges to oranges. Don't you need me like I need you now?
Yeah, all right. Wait, so why is one an investment? Sports car loaning. Have you ever, I believe?
All you have to do is just meet me in the apate 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 apate. Do 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 do.
Fast and Furious have made the GTR 34. Nice. Yeah.
Trying to find a timestamp I had.
Oh. Yeah, this is the, with car loans, cars are a hit and miss for with more miles on it. Like if you're just, are you buying them and holding them? Full of what I do, Ultra? I'm gonna show you one example of what I do.
As long as so, hey, the biggest thing, Snarly, is that you understand and have peace of mind with your investments. If you factored in everything that we've talked about and you've decided that the 500 index fund is for you, then you're making an informed decision. You may be right, you may be wrong, but a big part of investing is your peace of mind. So if you have that peace of mind from everything we've talked about, you factored in all the decisions, and that's what you want to go with, I support you, man. I just want to make sure that you know both ways, the pros and cons, each direction on your actions. Yeah, as long as you feel good.
Receive unexpected money. This is a great question. Nope, I'm gonna start over. I'm gonna start over, Ultra. Here we go. What to do if you get unexpected money? This all goes back to the 5 steps of financial success. How does this affect your budget, emergency fund, goals, investing and savings, and
There you go.
navigating portion of your life? So reassess your budget. It probably didn't change if you got unexpected money. Reassess your emergency fund. That probably didn't change with new money. Reassess your goals. That probably didn't change with new money. But now you can take that money and invest and save towards your goals to help you achieve those goals. So if you get new money, just go through the 5 steps of financial success. You're actually beginning on step 5 and then go through the other steps to figure out what changes can be made to your financial plan to help you achieve your financial goals.
All right, let's go Clippy here.
Money and invest in, and then go through the financial plan to help you achieve your financial goals. help you achieve your financial goals. Now you can plan to help you achieve your financial goals. Now you can take that money, fund goals, and over ultra. Here we go. What to do if you get unexpected money. This all goes back to the 5 steps of financial success. How does this affect your budget, emergency fund, goals, investing and savings, and, well, this is a navigating portion of your life. So reassess your budget. It probably didn't change if you got unexpected money. Reassess your emergency fund. That probably didn't change with new money. Reassess your goals. That probably didn't change with new money. But now you can take that money and invest and save towards your goals to help you achieve those goals. So if you get new money, just go through the 5 steps of financial success. You're actually beginning on step 5 and then go through the other steps to figure out what changes can be made to your financial plan to help you achieve your financial goals. Start over ultra, here we go. What to do if you get unexpected money. This all goes back to the 5 steps of financial success. How does this affect your budget, emergency fund, goals, investing and savings, and, well, this is a navigating portion of your life. So reassess your budget. It probably didn't change if you got unexpected money. Reassess your emergency fund. That wasn't my best, Ultra. That wasn't my best point in your life, right? If all of a sudden you just got break that down. This person wants to retire in 15 years. They have almost no savings.
Give me 1 sec here. I'm gonna go see if there's any extra food out there.
A lot of people ask questions about whether or not they can
The family is gone. Never mind.
retire in 5, 10, 15 years or whatever it may be. And a lot of this just comes down to simple math. But the easiest way to retire is to keep your expenses low. The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need much of a nest egg. But if you still have a mortgage and car loans, you're now talking about needing $1,500, $2,500 extra per month that you need to pull from your nest egg. So my number 1 recommendation for almost all people always is to get your expenses as low as possible, but especially targeted as you head towards retirement, so that you have very low expenses and your nest egg doesn't need to be as high to carry you through retirement.
That clip is very long. Let's see what we can do with it.
Dollars extra possible, but especially targeted to be as high to carry you through retirement. As high to carry you through retirement. 1,500 high to carry you through retirement. 1,500, 2,500. A lot of people ask questions about whether or not they can retire in 5, 10, 15 years or whatever it may be. And a lot of this just comes down to simple math. But the easiest way to retire is to keep your expenses low. The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need much of a nest egg. But if you still have a mortgage and car loans, you're now talking about needing $1,500, $2,500 extra per month that you need to pull from your nest egg. So my number one recommendation for almost all people always is to get your expenses as low as possible, but especially targeted as you head towards retirement, so that you have very low expenses and your nest egg doesn't need to be as high to carry you through retirement. A lot of people ask questions about whether or not they can retire in 5, 10, 15 years or whatever it may be. And a lot of this just comes down to simple math. But the easiest way to retire is to keep your expenses low. The lower your way to retire is to keep the easiest way to retire is to keep your expenses low. The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need much of a nest egg. But if you still have a mortgage and car loans, you're now talking about needing $1,500, $2,500 extra per month that you need to pull from your nest egg. So my number one recommendation for almost all people always is to get your expenses as low as possible, but especially targeted as you head towards retirement, so that you have very low expenses and your nest egg doesn't need to be as high to carry you through retirement. The easiest way to retire is to keep your expenses low. The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need...
Hey, what's up, Elsa Perry?
If you still have a mortgage and car loans, you're now talking about needing $1,500, $2,500 extra per month that you need to pull from your nest egg. So
I'm making clips, Elsa.
For almost all people always is to get your expenses as low as possible, but especially targeted as you head towards retirement, so that you have very low expenses and your nest egg doesn't need to be as high to carry you through retirement. The easiest way to retire is to keep your expenses
I gotta see if there's a way
The
to...
lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement...
That's a good way to look at it, Snarly.
So you don't need much of a nest egg. But if you still have a mortgage and... The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need much of a nest egg. But if you still have a mortgage and car loans, you're now talking about needing $1,500, $2,500 extra per month.
It depends on your dollar amount, right? So if you have $10,000, it's not going to be crazy. But if you have $1 million, it's going to mean a lot. So over the course of your lifetime, just to be straight with you, 0.01% on an expense ratio is not crazy, but every dollar counts. So you also want to take in reputation, right? So VTI, I think, is 0.04, but you might find one that's 0.02. 0.03. If you trust that company as much as you trust, say, Vanguard or another company, then you can make that move. You just want to know about the reliability and trustworthiness of the company you're investing in.
That you need to pull from your nest egg. So my number one recommendation for almost all people always is to get your expenses as low as possible, but especially targeted as you head towards retirement, so that you have very low expenses and your nest egg doesn't need to be as high to carry you through retirement. The lower your expenses in retirement, the lower the nest egg needed to supplement and take care of your expenses while in retirement. So if you have no mortgage, no car payments, and all you're doing is insurance and utilities and whatever else you want in retirement, your expenses are low, so you don't need much.
Not that I know of. VTI comparable funds. Fidelity, iShares, Schwab. Almost every company's going to have this, but I don't know. Let's see what Investopedia says. Vanguard total stock, 0.04. Schwab, 0.03. iShares is similar at 0.2. That's much higher. And 0.6. So I don't know how to compare all of them, but right, they're all going to be, the big ones are going to have one, all going to be close to each other.
Yeah, so versus already towards your retirement. Yes. And it all comes down to the taxes and how you can most effectively use your tax rates to help your retirement goals. So if you're going to pay low taxes now, go ahead and do a Roth conversion. If you're going to pay low taxes in retirement or lower, then put it in a traditional. So yeah, that answer came out bad. I got mixed up. I'm going to redo that one. When deciding whether to do a traditional IRA or a Roth IRA, it generally comes down to when do you want to pay the taxes.
Is it true that mutual funds, even if passively managed, are usually subject to more capital gains because of more frequent internal shifts? Well, this is the term mutual fund. You want to switch out. So, mutual fund is just a basket of goods. Turnover inside of a mutual fund can happen, and it happens more frequently depending on the fund. So what you might be talking about is you're likely to see more turnover or more frequent internal shifts with an actively managed fund as opposed to an index. All an index fund does is buy and sell to match the benchmark it's tracking, maybe with a few little shifts. So there's generally not much internal shifts on a index fund. But if you're looking at actively managed, yes, and funds like that should generally be held in tax advantage accounts like an IRA.
If you are in a high income tax bracket right now, you probably want to do everything in a traditional, assuming your tax rate will be lower in retirement. If your tax rates are lower now than they will be in retirement, then it makes sense to do the Roth conversion now or Roth contribution now. So you just need to factor in when you're going to pay the taxes and what your tax rates will be during those times, and take advantage and apply money to the IRA type that makes the most sense based on what you think your taxes will be now and in the future.
All right, let's see here.
Then it makes sense to be during those times and take advantage and apply money to the IRA type that makes the most sense based on what you think your taxes will be now and in the future. Or taxes will be now and in the future. Or now than IRA, it generally comes down to when deciding whether to do a traditional IRA or a Roth IRA, it generally comes down to when do you want to pay the taxes. If you are in a high income tax bracket right now, you probably want to do everything in a traditional, assuming your tax rate will be lower in retirement. If your tax rates are lower now than they will be in retirement, then it makes sense to do the Roth conversion now or Roth contribution now. So you just need to factor in when you're going to pay the taxes and what your tax rates will be during those times, and take advantage and apply money to the IRA type that makes the most sense based on what you think your taxes will be now and in the future. When deciding what, I don't know about that one, Ultra. That one came out weird. I don't know. A distribution. Or a Roth IRA, you've already paid tax on the money, you put it into a Roth, it grows tax free, and then you take distributions tax free. The Roths are great if you have extra money and you're under the income limitation.
FZ Rocks. Let's see. Sometimes I don't generally know them by ticker symbols. FZ Rocks. Total market. Hey, it's a good one too. Oh, is this the zero? They have zero expense ratio. Yeah. So they get you in other ways. They're hoping to get a fee from you from something else that you do with them. But hey, I love a zero fund. As long as you don't get wrapped up in something else that costs money with them, it's a good fund. All of these big companies with their 500 index funds are probably going to be pretty comparable.
Roll the credit card. Travel about 10, 50 times a year abroad. It worked super well. And after Vanguard in Australia, I made a budget for if
Yep. The FZ Rocks looked like it was US, but let's take a look. Total market index. Yeah, 100% or 99.4 United States.
70,000 cash. The Vanguard share owners are the owners. Yeah, there's no centralized owner. Emergency fund you should have. It's going to be dependent. If you're wondering how much emergency fund you should have, it's going to be dependent on your thoughts and feelings towards a lot of things. I personally recommend 12 months of basic living expenses as an emergency fund, but you can change this if you are more or less conservative. Some people like having 2 years of an emergency fund. That's okay. Some people like 3 months. It's a little bit low for me. If you really need an example, go back to COVID. A lot of people lost their jobs for a lot longer than they thought. I know that was maybe a once in a lifetime event, but there are things that happen throughout your life that are going to cause financial strife. You should have an emergency fund that gives you ultimate peace of mind. Should something happen negative to you, you have the money to.
And are there other ways they could get me that I know of? So what Fidelity and these other companies do with the zero funds, they want to get you in there, and then what they're hoping is that you'll get connected through one of their other services, and that's how they're going to charge you a fee. I think you're about to get an ad. I'm going to wait.
Take care of you without having to pull money out of your investments. Emergency fund. That's okay. Better than they thought. I know that was maybe a once in a lifetime event, but there are things that happen throughout your life that are going to cause financial strife. You should have an emergency fund that gives you ultimate peace of mind. Should something happen negative to you, you have the money to take care of you without having to pull money out of your investments. Pull money out of your investments. 2 years of. If you're wondering how much of an emergency fund you should have, if you're wondering how much, if you're wondering how much of an emergency fund you should have, it's going to be dependent. If you're wondering how much emergency fund you should, if you're wondering how much emergency fund you should have, it's going to be dependent on your thoughts and feelings towards a lot of things. I personally recommend 12 months of basic living expenses as an emergency fund, but you can change this if you are more or less conservative. Some people like having 2 years of emergency fund. That's okay. Some people like 3 months. That's a little bit low for me. If you really need an example, go back to COVID. A lot of people lost their jobs for a lot longer than they thought. I know that was maybe a once in a lifetime event, but there are things that happen throughout your life that are going to cause financial strife. You should have an emergency fund that gives you ultimate peace of mind. Should something happen negative to you, you have the money to take care of you without having to pull money out of your investments. If you're wondering how much emergency fund you should have, it's going to be dependent on your thoughts and feelings towards a lot of things. I personally recommend 12 months of basic living expenses as an emergency.
Boom. All right, welcome back. So what those companies try to do, Snarly, they want to get you in with like an introductory something here, right? So I don't know how much you know about how businesses work, but there are things called loss leaders. So think about your local grocery store. They might put that they have $6 per pound T-bones. That's an incredible price. What they're hoping for is that you go in there, you're like, man, I'm going to go load up on T-bones. They're like, sweet. But while you're there, you're also going to buy eggs, cleaning supplies for your house, different things that you need. So you end up spending more money on other things kind of unexpectedly, changing the profit margin. So I don't see them doing that here. But what they'd be trying to get you to do is into a specific account type. Maybe they want you to get into advice, or maybe they want you to get into one of their, I don't know, a certain account that charges it. So, yikes, why does this only have a 3 out of 5 overall? Oh, Morningstar. I wonder why, though. Huh.
Support the mission, there are ways to contribute financially and by. For most people, financial advice is impossible to get into.
Isn't going to be around too long if it's a loss lead, and is this index that can be only traded once a day make a difference for me as a long-term investor? These are great questions. It's Fidelity, which is what gives me confidence that the fund is going to be around our entire lives. It's being a loss leader doesn't necessarily talk about how long, because that might be their introductory. When somebody like yourself is looking for investments, they go, ooh, this has 0 expense ratio? Boom, I'm in. So they buy it. So they get a lot of money in there. What they're hoping for, though, is that since you're there, one of their other products will get you, right? So they got you in the door, and they're hoping they're going to get you to spend money somewhere else. So I don't think the fund is going to go anywhere else. You still own the stock. So even if the fund got switched from a 0 to a standard, you know, you would just go from 0 expense ratio to however many basis points. So a mutual fund can only be traded once a day. An ETF can be traded like a stock. If you're talking about 30, 40 years, doesn't matter. Doesn't matter at all. But if you're talking about a short-term investment, the ability to trade it throughout the day matters. The standard is 0.015. 4 basis points.
This is where Free Advice Guy comes in. I want to offer advice to the public for free. If you like this and you want to support the mission, there are ways to contribute financially, and by contributing financially, you will actually help other people get free financial advice at the same time. So if you like the mission, support the mission, and want to help other people, join Free Advice Guy and contribute, and let's change the world together. I don't know. What'd you think of that, Oak?
All right. This is a little cheesy commercial. You ready for this? Okay. See, it's not crazy, but, you know, 1.5 basis points matters over your lifetime.
There are ways to contribute financially, like the mission, support the mission, and want to help other people, join Free Advice Guy and contribute, and let's change the world together. Together. For advice to the... For most people, financial advice is... For most people, financial advice is impossible to get into. They either can't afford it or they don't have the means for an advisor to want to manage their assets. This is where Free Advice Guy comes in. I want to offer advice to the public for free. If you like this and you want to support the mission, there are ways to contribute financially, and by contributing financially, you will actually help other people get free financial advice at the same time. So if you like the mission, support the mission, and want to help other people, join Free Advice Guy and contribute, and let's change the world together. For most people, financial advice is impossible to get into. They either can't afford it or they don't have the means for an advisor to want to manage their assets. This is where Free Advice Guy comes in. I want to offer advice to the public for free. If you like this and you want to support the mission, there are ways to contribute financially, and by contributing financially, you will actually help other people get free financial advice at the same time. So if you like the mission, support the mission, and want to help other people, join Free Advice Guy and contribute, and let's change the world together. For most people...
Boom, there's one commercial.
Like topics.
Yo, what's up, Cool Bird? CB?
Yeah, I don't understand the algorithm at all.
Ooh.
400
So did you hear some of the conversation we were talking about, CB?
views 4 times in a row. This one gets 2 more views if it does. Oh, this one is. Especially the way I do it.
But there are lots of things to consider there, CB. I don't want to... Okay. So, I don't know how much we want to cover here, Snarly, if there's anything important that we talked about that you want to let CB know, but the zero expense funds are great funds. What they're trying to do, though, is get you into that for free, and then they hope you spend money elsewhere. But if you don't spend money elsewhere, you should get in a 0% expense rate, or zero expense ratio.
Charge you for assets under management, an hourly fee, or a one-time fee. And all of those are very expensive. To that conversation, anybody listening can get that advantage as well. Or keep my money legal. I'll avoid this one.
So yeah, if you got any questions on what you want to pick, CB, let me know. We just had a great conversation. Yeah, earlier in the conversation, CB, we were deciding whether or not to go between the 500 index fund or VTI. So
These questions,
VU or VTI.
just throw it out there. Sit over a long-term period, you're likely going to earn more than that annuity. All right. When considering a lump sum payout or a pension payout, there's a few things you want to consider. There's a math or a money answer to this, where if you take the lump sum and invest it over a long-term period, you're likely going to earn more than that annuity was going to pay you. An annuity is for somebody who is maybe not good with their finances or just likes having a guaranteed income at some point in their life. So you have to determine what type of person you are. If you're irresponsible or you just like the idea of having guaranteed income every month. And
Me too, CB. Me too.
But if your goal is to maximize your money, taking the lump sum and investing...
Agreed,
over
CB.
long-term
Long live mid and small cap.
return more than the annuity, though there are no guarantees.
All right, we got annuity versus this. There are a lot more clips from Monday's stream than I anticipated.
Who is maybe idea of having guaranteed income every month, an annuity might make sense for you. But if your goal is to maximize your money, taking the lump sum and investing it over the long term is likely going to return more than the annuity, though there are no guarantees. Annuity, though there are no guarantees. An annuity is for somebody. There are no guarantees. An annuity is for some. There are no guarantees. An annuity is for somebody who is maybe not good with their finances or just likes having a guaranteed income at some point in their life. So you have to determine what type of person you are. If you're irresponsible or you just like the idea of having guaranteed income every month, an annuity might make sense for you. But if your goal is to maximize your money, taking the lump sum and investing it over the long term is likely going to return more than the annuity.
One question I had about the FZ Rocks. Is it bad to keep that in a taxable brokerage account? I heard people talking about it having tax disadvantages as opposed to an ETF. Nah, not really. I don't really want to get into the differences between ETFs and mutual funds. There are ways, even, dude, I was in the industry for 13 years and you research it, and I don't fully get how an ETF is more tax efficient, but I think it's through the way they're able to move shares inside the fund to distribute gains, things like that. But in reality, it's not going to make too much of a difference. An ETF is generally more tax efficient, but it's not going to be crazy, especially in an index fund like that. Turnover is not very big inside of a like a 500 index fund. Yo, what's up, Prad? Life's good, my man. How are you? Yo, I saw you firing last night, Prad. That had to be fun. I love it, Prad. I loved seeing it last night, man. Twitter, YouTube, Twitch. My man was firing all cylinders.
An annuity is for somebody who, for a long-term period, you're likely going to earn more out. There's a few things you.
I think I'm gonna leave this one short.
A lump sum payout or a pension payout. There's a few things you want to consider. There's a math or a money answer to this. Where if you take the lump sum and invest it over a long-term period, you're likely going to earn more than that annuity was going to pay you. An annuity is for somebody who is maybe not good with their finances or just likes having a guaranteed income at some point in their life. So you have to determine what type of person you are. If you're irresponsible or you just like the idea of having guaranteed income every month, an annuity might make sense for you. But if your goal is to maximize your money, taking the lump sum and investing it over the long term is likely going to return more than the annuity, though there are no guarantees. When considering a lump sum,
yeah, I'm definitely shorting this one.
Pension payout, there's a few things you want to consider. There's a math or a money answer to this, where if you take the lump sum and invest it over a long-term period, you're likely going to earn more than that annuity was going to pay you. An annuity is for somebody who is maybe not good with their finances.
Haven't been able to find a way it's more efficient, especially since FZ Rocks is passively managed total market, essentially identical to VTI.
You're irresponsible, or you just like the idea of having guaranteed income every month, an annuity might make sense for you. But if your goal is to maximize your money, taking the lump sum and investing it over the long term is likely going to return more than the annuity, though there are no guarantees. An annuity is for somebody who is maybe.
All right, this is really goofy, but today I blow dried my beard after the shower. It's so like managed today. But yeah, you are correct, CB. Stock funds you generally want to have in your most tax advantaged accounts, so brokerage accounts, Roth IRAs, things like that. You'll also have them in your traditionals as well, because that's going to be where a large part of your money likely ends up. But having something like a VTI or total stock market inside of a taxable account is very common, because though there will be distributions from dividends, there will be capital gains paid out by the fund. It's generally not crazy high, and they are considered tax efficient funds. Dude, did any of you guys hear this from my stream? Hold on a second. Sorry, I'm doing something goofy here for a minute, but whoops. I gotta pull up TikTok here. TikTok? I don't even know if you can see me. I'm on the floor below the microphone here. But TikTok gave me a recap, or I'm sorry, canceled my TikTok stream on Tuesday, and I couldn't figure out why. Because it gave me a violation. It said, this is crazy, but it says sexual exploitation and gender-based violence. Huh? I literally talk finance and play Valorant. Unless somebody thought Valorant was the gender-based violence, but I'm not really sure about the exploitation. Like, that's so weird. But yeah, TikTok removed my access to stream on it, and I don't understand why. Still on the floor looking at this thing. I put in a appeal, but it doesn't look to have done anything yet. So weird, man. So weird. Very strange. Just meet me at the apate. Use the restroom. Be right back. All right. And then he needs to figure out his financial goals. So if paying off debt is his goal, he could take all that extra surplus and begin strategically paying down his debt. But if you start doing this and does that, it's not gonna work. Whoa. This person was with his girlfriend from the age of 13 to 25. Yeah, it's a lot of things. My buddy just went through a pretty, he wasn't given any extra time. stay tomorrow, but tonight go crazy. All you gotta do is just meet me at the.
A Australian one. XRP itself, it comes out with something better. I don't know. And people know about have something to invest. What I'm willing to $50 coin. I don't have much money invested in crypto, so what would you do? Or something like that? You got 20 years to get to retirement. That would be incredible. But he's really good. This is a long one. Depends, though, for the underneath release to be real. So looking at bonds in the first place is to sort of reimburse. ETI is like 35 or 3,600 stocks. So if you want to be exposed to mid and small cap, which I generally recommend as part of your stock allocation for the long term, you want to be invested in small and mid. They'll get the second car from their father, from his father, but they're not very far into their savings journey. This kind to read that ultra? I'm really sorry. I just realized I closed it out. Taxes on first is because it's in India. But then it's gold. Doesn't that feel weird? Like keep it PG, but like showing your stuff for a couple of bucks or millions of bucks, is that really like those goals is retirement? That's when you would begin looking at investing in your IRA. So you just have to understand what your money for emergency fund or a money market high yield savings account. For this one right here, I've already given this response multiple times. If you're considering a Roth IRA or a high yield savings account, you need to understand what the money's for and actually go through the 5 steps of financial success. So you have your budget. A high yield savings account would be for your emergency fund or a money market account. And then you need to have your goals with specific dollar amounts, time horizons, and risk tolerances. Assuming one of those goals is retirement, that's when you would begin looking at investing in your IRA. So you just have to understand what your money is for, what your goal is for that money, and then you can decide how much money to put in towards what accounts to help you accomplish your financial goals. All right, there we go.
Let's see here.
Then you need to have your to understand what your and then you can decide how much money to put in towards what accounts to help you accomplish your financial goals. Your financial goals account, and then I've already given this response multiple times. If you're considering a Roth IRA, if you're considering a Roth IRA or a high yield savings account, you need to understand what the money's for and actually go through the 5 steps of financial success. So you have your budget. A high yield savings account would be for your emergency fund or a money market account. And then you need to have your goals with specific dollar amounts, time.
Would you say it's safe to assume the tax difference between an ETF like VTI and FSROX is negatable when the expense ratio difference is factored in given their extremely similar structure? Yes. The tax difference is not going to be much between those two funds. I can't say specifically what it would be, but they're both not trying. Neither fund wants turnover. Neither fund wants to pass things down to shareholders.
Horizons and risk tolerances. Assuming one of those goals is retirement, that's when you would begin looking at investing in your IRA. So you just have to understand what your money is for, what your goal is for that money, and then you can decide how much money to put in towards what accounts to help you accomplish your financial goals. If you're considering a Roth IRA or a high yield savings account, you need to understand what the money's for and actually go through the 5 steps of financial success. So you have your budget. A high yield savings account would be for your emergency fund or a money market account. And then you need to have your goals with specific dollar amounts, time horizons, and risk tolerances. Assuming one of those goals is retirement,
I knew what you meant.
That's when you would begin looking at investing.
All right, we saved that clip. I think this VOD is almost done, and then I will go to Tuesday's VOD. I gotta know if you make that step or not. Do you know the difference between, this goes for anything, but I'll be specific. Do you know the difference between asking a girl out? I'll be talking to her now either. I take it back, Omar. Hey, what should I do? And she's like, hey, I don't really know. Rejected. To you might not recoup that money are after you graduate. Financially, possibly insurance company and currently in transitioning out of this world, possibly to help your management have no debt, about 100K in the bank. Just wondering if an MBA would be a good financial decision for me. Is going back to school worth it financially? Possibly. It could also be a gigantic financial mistake. You have to do research on your degree and understand what your job prospects are after you graduate. A degree can absolutely get your foot in the door, looks nice on your resume, and get you in a conversation with an employer. But if you take out a bunch of debt or you pay a high cost for a degree that doesn't have much of a job market or high earnings when you graduate, you might not recoup that money, or at least not in a way that you're satisfied with. So just make sure you research any degree you want to get into, what job market is out there, and if you'll get a good return on investment by furthering your education. Boom. Boom. All right, let's clip this one.
Based on your resume, at least not in a way that you're satisfied with. So just make sure you research any degree you want to get into, what job market is out there, and if you'll get a good return on investment by furthering your education. By furthering your education. Looks nice on your resume. On investment by furthering your education. Looks nice on your resume and get you. Is going back to school worth it financially? Is going back to school worth it financially? Possibly. It could also be a gigantic financial mistake. You have to do research on your degree and understand what your job prospects are after you graduate. A degree can absolutely get your foot in the door, looks nice on your resume, and get you in a conversation with an employer. But if you take out a bunch of debt, or you pay a high cost for a degree that doesn't have much of a job market or high earnings when you graduate, you might not recoup that money, or at least not in a way that you're satisfied with. So just make sure you research any degree you want to get into, what job market is out there, and if you'll get a good return on investment by furthering your education. Is going back to school worth it financially? Possibly. It could also be a gigantic financial.
I got a lot more clips out of this stream than I thought I was going to. I think I got like close to 15.
$1,000 a month, just crazy. But crazy budget questions. Yes. Stop. Provide exposure. But like the tides change politically, but what to believe on the internet. Cabinet he's put together. Ooh.
I think those were the same. ETF Central. Okay, Schwab has a little bit less equities, a little bit lower yield, newer fund. But like, look at these returns. That's weird, the flows. I don't know what that's talking about. But performance, very near each other. Looks like Schwab actually has slightly better performance than VTI. Is Schwab another 0-1? Oh no, expense ratio, both 0.03. So Schwab has made a decision to exclude about 150 stocks from their index. I don't know why. At least on ETF Central. I don't know how accurate this is, but potentially less stocks inside of SCHB than VTI, but it does look like it's performed a little bit better. It's not crazy, but over time these things mean something. But look at this exactly. Their top 15 holdings exactly the same, because their funds are the same and they're near each other. Okay, Schwab bets a little bit more on Apple, a little bit more on Microsoft, a little bit more on Nvidia, a little bit more on Amazon, about the same as Facebook. So that's interesting. You can see Schwab has made a little bit more, has made more decisions to invest in certain things and not other things. So they're very similar, but I would say that they have similar backing, similar goals.
I might be done. Spend way too much. Too much ego. Too much.
All right. Then the last part is a Valorant stream. So let's do this. Let's pause this. And then let's go to clips. Let's manage clips. Let's see how many were created today. Wow. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 clips off of Monday's stream. Not bad. Not bad at all. All right. Let's go to past broadcasts. All you have to do is just meet me at the...
Streams are gaming. My daytime streams.
Yo, what's up, Onion Plug? Welcome to the channel. If it looks weird, I'm creating clips from previous streams right now while also answering questions from chat. But to give you some background, I've been a certified financial planner professional since 2014. I have over 13 years experience at Vanguard, and I quit my job to hopefully change the world and give free financial advice to the masses. So what sort of questions you got, Onion? Hit me! Thanks, Onion. I appreciate you. I want to make my mark on this world, and helping people with their finances, I think, is how I do that. If you don't have any questions, or we can get into those, but do you want to go over the 5 steps to financial success? I'm new to trading since March. Only buy tech stocks, Nvidia, Reddit, TSM, but I'm in it for the long haul. All right. So when you invest in individual stocks, you're taking a gigantic risk, right? So if another company comes out that does AI stuff well, Nvidia might tank. Or if bad news comes out. They released their last earnings report that was good and still went down, which is crazy. Reddit, another message board, might come up. Someone else might become a microprocessor or create microprocessors. So you're taking a lot of extra risk when you buy individual stocks. So I'm just throwing that out there up front. I have a grasp on options somewhat, and I'm not versed in anything else. And everything I read online seems contradictory. All right, well, let me give you my investment philosophy. I believe in the entire market, buying and owning the entire market. What's safer than stocks? Pretty much almost everything is safer than stocks, but you want to actually figure out what the goal of your money is first before you worry about that stuff. So I know you already said long haul, right? But you want a budget and emergency fund. And then you want specific goals for the money. So specific dollar amounts, time horizons, and risk tolerances. Once you begin investing, that's where you want to compare it with like your risk tolerance. So like me, I'm super aggressive. My retirement savings is essentially 100% stocks. Because if the stock market loses 90% tomorrow, yo, thanks for the follow, Onion. But if the stock market lost 90% tomorrow, I'm still going to sleep like a baby. I'm probably going to throw more money at it, and it's not going to affect me in it either anyway. But there are other people that if the stock market loses 20%, they're going to lose their minds, sell out, make bad decisions, and they're not going to be able to sleep well at night. So you want to match up your risk with your investments. So, like stocks, you invest in them because in the long run, the total stock market's averaged like 10% for the last 90 plus years. That's why you're invested in it. So tell me a little bit more about your risk and why you're looking for something safer than stocks. Okay, hold on. I don't invest in individual stocks. I invest in like mutual funds and ETFs, like the total market. So instead of Nvidia, I would own VTI, which is the entire US stock market. Yes. You spread your risk out through diversification when you own more positions. Now, there's a risk reward for that, right? If you put 100% of your investments, or, you said what, 1, 2, 3, let's just say three funds. So you put 33% into NVIDIA, Reddit, and TSM. If those 3 funds continue to just smoke the whole market, you'll be very happy you did that. But if one of those companies goes through any adversity and tanks, whether it's rational or irrational, your portfolio is going to feel that big time. So you just want to be thinking about that.
Topics I could discuss.
Yes, it is safer with more with ETFs because they're more diverse. Right, the more stocks, if you own one stock, that one stock could have crazy volatility, it could cease to exist, but it could also go to the moon. With an ETF or a mutual fund, you're going to own significantly more stocks, so if that same company were to go to zero, it's going to affect you less because you own a much larger basket of securities. Dude, all of these election texts are there's so many of them, man. I can't wait. Wow, I haven't looked at my phone in like 10 minutes. I have 3 texts about the election. Oof. Yeah, for most people, Onion, it is. But you have to remember the trade-off. Investing in those 3 funds, you increase your risk significantly. With that, you also increase your potential reward significantly. So, like, NVIDIA is a microcosm of this. If you had 100% of your portfolio in NVIDIA, when they released their earnings call, I think it dropped like 20%, something crazy. It was nuts. But since then, it shot back up and has outperformed the market since that day it dropped. But that means this whole time you've been doing this with your portfolio because you own NVIDIA. Whereas if you own, say, a technology ETF, or the total stock market ETF or a 500 index fund, yeah, Nvidia still affected your portfolio, but it didn't swing as much because you had much more diversification.
Discuss here, but they're not really clipboard stuff. You're going to board that you would like to discuss. I will pull that one up. Talk.
I feel like I'm being rude for asking questions. Onion, I quit my job to do this, man. You are the opposite of rude right now. You are actually helping me fulfill my life's purpose. If you have 1,000 questions, I'm happy to answer them. So please. I feel like people would be in a good mind to keep their knowledge to themselves. Nah. I'm not in competition with you. So it's not like if for me to be successful, you have to fail. If we share our knowledge together, we can all be successful. That's actually what I'm trying to build here. I have a Patreon. I want to build a big community. Yeah, Alpha, that's a good way to look at it. You're helping the audience, Onion, by asking your questions. Because sometimes you get people in here who don't even know what to ask. So when somebody asks something in chat, they're like, oh, I didn't even think about that. So you are helping out there tremendously. So I appreciate you greatly for coming in here. Hey, Alpha, if you're still here, I've been meaning to talk to you for like a couple weeks. I wanted to go over something with you that happened with my stream. It's a really good thing, but I had my first Patreon conversation. Yo, thanks, Alpha. Gifting a sub to Onion. You're the man, Alpha. But I was hoping you and I could chat like we did that one night, and I could go over some things with you and just kind of get your thoughts on it.
Top of their index funds, they're going to be overweighting into that one stock, not actually more diversification. If you own that position, navigating your life changes. You need a budget.
I did not realize I was making a clip here. All right. So to give you the brief thing right now, Alpha, and then we can talk about this later. I always call you Alpha, even though I know it's Steve, but because you're Alpha in chat. But I had a Patreon conversation. Like one of my members of Patreon. I'm the mod of there, Steve. Oh yeah, you're right. My bad, Alpha. My bad. I always forget that Steve has his own thing. Wait, I thought he said. Oh no, I'm an idiot. Alpha Exchange. I'm an idiot. He said whenever I see the Alpha, it's him, but that's when he's on stream, correct? Live channels we think you'll like. You know, it's funny, a couple days ago, or the Kamala one was up here as well, or Kamala, however you pronounce that. All right. Man, I've done that twice now, Alpha. I apologize.
Seeking tips on investing and strategy at 23 years old. You got to go through the 5 steps of financial success. Begin. Budget, emergency fund, goals, investing and saving, and navigating your life changes. You need a budget that shows where every dollar is coming in and going out.
Long story short, I'm 40. I'm 40, baby. Single and pretty much back at square one in life, which is much better than where I was. I'll just say that. My portfolio is a tiny 1,000, but I want to continuously make deposits and have it grow. Not at all looking for quick moves to make quick cash. Not at all. And it's probably worth noting my previous life struggles did not involve gambling addiction, so that is kind of relevant. I love it. 45. All right, we got some 40-year-olds in here. We're hanging out. That's what I'm talking about. All right, Onion, I'm going to go through. I just did it in this clip, so I don't know if you heard that, but you want to go through the 5 steps of financial success. So the very first thing you need to do is create a budget, understand where every dollar is coming and going. And hold on one sec here. I don't mean to be a salesman, so I apologize for what I'm about to say, but through the Patreon, which I believe it's as low as $10 a month, it comes with the a personal monthly budget and emergency fund calculator. So you put all your income, your expenses, and then it tells you your surplus and your deficit. And then it tells you what your emergency fund needs to be over 3, 6, 12, 24 months. So all of this stuff is important. Once you have your budget and your emergency fund taken care of, you want to set your stuff up for goals. So if you're 40, you're probably thinking about retirement, right? So you want to set out how much do you want to have at retirement when you get there. And this actually involves kind of some backwards math. So what you want to figure out is how much do you want to spend in today's dollars? You know, let's just say it's 60 grand. We inflate that over the next 25 years. Maybe that's 90,000 in future dollars compared to 60,000 today would be the same spending. So if you know it's 90,000, you then need to subtract how much income you're going to have in retirement. So say Social Security is going to give you, 30,000 a year or 40,000 a year. That means you're going to need 50 to 60,000 from your portfolio every year to cover you. So now you need to backwards math that. How much can you pull out from your portfolio every year? How much do you need to have saved to pull out, let's just call it 60,000 every year? You might be looking at like a $2 million portfolio by the time you're 65 so that you can pull out 60 grand a year and have your money last your entire life. that was really long, Onion. I threw a lot at you, but everything about what I do here is for to get people into a better financial picture. The first step you have to take is the first step, and then each step builds on itself until you're just kind of like chugging along, running to financial success. Yep. Income dividend by percent growth. Yeah, that's kind of one way to look at it. Yep. I don't know that I'd use the term dividend because that's very specific, but distributions. Take your distribution, divide it by a percentage, and that's what your portfolio size needs to be.
That covers your basic living expenses. I like 12 months for you to be more or less conservative depending on your nature. Then you need goals with specific dollar amounts, time horizons, and risk tolerances. And from there,
Thank you, Alpha. I appreciate it. Alpha, what's your name? If you feel like sharing it. If you don't feel like sharing it, you can tell me to bug off.
Investing and saving towards those goals. And as your life changes, you navigate those changes and update your financial plan accordingly. If you continuously follow this
All right, relapse.
financial success throughout your life, you're going to have
Relapse it
a
is.
of achieving financial success by the time you want to achieve your goals.
All right. Let's see. It's another 5 steps. What I worry about here is I have so many clips where I go over the 5 steps to financial success that I worry there's too many.
Investing and saving, you're going to have a much success by the time you want to achieve your goals. By the time you want to achieve your goals. Time horizons and risk tolerances.
All right, let's see here. One thing I've read many places. People lose money when they make emotional moves. 100%. If you're sure a move will profit, but it violates your strict game plan, even if you make money, it's still a bad move because you broke your rules. Well, you also need to factor in if your rules are good rules. So let's look at that a little bit more in depth here, Onion. So if your rules are good rules, then it's a bad move that you broke your rules, right? So to give you a very specific example, let's just say you bought NVIDIA 2 months ago after the earnings report. It went down, and now we're back up. So you sold out. Well, what was the original purpose of that money? Right? If it was a short-term goal, you probably shouldn't have been invested in stocks in the first place. If it's a long-term move, why did you sell it? Is this the top you expect it to ever get to? Do you expect it to go further? Right? So I agree with the sentiment of what you said there, Onion. All right, I'm gonna try and simplify this for you, Onion. You want to invest at an asset allocation that makes sense based on your time horizon and risk tolerance. So you're 40 years old. I don't know what your risk tolerance is. We can go over that in a second. Actually, I'm going to throw that out there. 1, being very conservative, meaning you're willing to miss out on pretty much all of the returns in the market because you can't stomach volatility. You can't sleep at night when markets are moving up and down. Or 5, you're very aggressive, meaning you love the wild swings within the market because you think that the market's going to eventually overperform. So let's just say you figure out what your asset allocation is and you're comfortable 5. There you go. It's not necessarily money to burn. Like for me, I'm a 5. I wouldn't say I necessarily have money to burn, but if the stock market loses 90% tomorrow, I don't care. I'm going to keep riding it out. I'm probably going to throw more money at it. I'm not going to lose sleep, and I'm going to feel great. All right, so you're a 2. So let's just say you're 40 years old. You got another assumed 25 years of retirement. You might be comfortable with like 70% of your portfolio being in stock. Where the rules happen or where the problem happens is like right now or in the last few days, right? We've been close to all-time highs. So being that we're at all-time highs, some people get this mental thing of, man, we're at all-time highs. I got to sell. It can only go down from here. Not realizing that historically the stock market performs like a yo-yo while you're walking upstairs, right? From the beginning of when you invest, I don't know which direction this is going to be for you guys, but from the beginning of when you invest to 25 years from now, it's likely going to look like this. In the meantime, it's going to do this, right? So it's kind of like you're walking upstairs doing a yo-yo. That's what your yo-yo is, your stock portfolio. It's going to keep going up and down, but over time, it's likely just going to be up. But you have to be able to stomach the volatility. So people get on both sides. That when the markets are up, they sell. Mistake. When the markets are down, they sell. Mistake. Just let it ride, baby. Get your investments, know what you're invested in and why, and just put money towards it. Don't worry about what the market's doing daily, and just keep it rolling. Keep it rolling. All right, let's do this. Investing in strategy at 23 years old. You got to go through the tips on investing in strategy. Seeking tips on investing. Seeking tips on investing in strategy at 23 years old. You got to go. I have turned to work soon. Do you have a Discord? I do have a Discord. Also, do you have a resource? Is Investopedia a waste of time? Investopedia is not a waste of time. Investopedia has a lot of information. I would wait to look, though, at resources until you know what you want. If you want to spend, I probably have 70 shorts, maybe more, I don't know, 90 shorts on YouTube. It's the quick hits. Ooh, thank you. Thank you, Relapse. But if you go to my YouTube, you can actually find these clips on all of my socials, but YouTube makes it so it's in the quick, hold on, playlist. So this has 90 videos, quick hits for financial success. If you watch these videos, Onion, it will, and make sure you give a thumbs up if you do on them, but if you watch these, you will have a much deeper base when it comes to investing and just financials altogether. Once you've kind of watched those, then you'll start to formulate questions in your head, things I didn't maybe go into detail about that you have questions about, and then we can look. But there's a lot of resources out there. Most resources are trying to drive your clicks and want you to buy something, so be aware. But that's where it works out, or where it's beneficial to know where your questions are. Get deep in there, learn as much as you can, figure out what you don't know, then we can talk directly about it. Relapse coming through clutch with the Discord. It is overwhelming, Onion, especially at 40. There's a it feels like you're behind, and just to be blunt with you, you are a little bit behind. But now that you know that, you can start taking the steps. Awesome. Thanks, Relapse. I appreciate you. Knowing your steps will help you. That's where the budget and emergency fund are very important, because you figure out how much surplus you have every month, and then you can be very aggressive towards your goals. So let's figure that out. But I definitely want to have more conversations in the future, Onion. Go through the 5 steps of financial success. Beat goals with specific dollar amount. And as your life, you're going to have a much better shot of achieving financial success by the time you want to achieve. I'm going here. You're going to have a much better shot of achieving financial success. Achieving financial success. Financial success. Seeking tips on investing in strategy at 23 years old. You got to go through the 5 steps of financial success. Begin. Love it, Onion. Welcome. Welcome to the community. Saving and navigating your life changes. You need a budget that shows where every dollar is coming in and going out. An emergency fund that covers your basic living. Relapse a real one. I like 12 months, but you could be more or less conservative depending on your. I love your community, by the way, Relapse. I know it's. Wait, don't you actually go on stream as well? Relapse, haven't I seen your name? Or maybe even your video? Or you're just prominent in the server? Because Alpha has, or Steve, all you guys in the Discord, dude, that whole community is just awesome. I love that. I don't want to be on stream. Understandable. But yeah, the whole Alpha community is just sick. Horizons and risk tolerances. And from there, the fun begins. Then you begin investing in savings towards those goals. Seeking tips on investing in strategy at 23 years old. You got to go through the 5
15 tips on investing in strategy at 23 years old. You got to go through the 5 steps of financial success. Begin. Budget, emergency fund.
Clip it. All right, let's go. No way. You've been there since day one? How did you meet him originally? Yeah, but that your whole community is just awesome. I'm jealous. Okay. How long have you been investing in crypto, Relapse?
You definitely don't. I think it actually depends on if you definitely don't. There are a lot of annuity absolutes
Wow.
out there. Some people say you definitely need one for retirement. Some people say you definitely don't. And I think it actually depends on the type of person you are. If you're very responsible with money, the money you would put into an annuity would likely grow far beyond what an annuity would pay you over time, given enough time in the market. But an annuity is for a very specific person. If you have high levels of stress and anxiety and you need guaranteed income every month, an annuity is good for you. If you also happen to be irresponsible and can't control your spending, then knowing you have monthly income coming in from an annuity is another benefit. So you really need to.
Ooh, Solana. Is that the one that invests in multiple? Oh no, it's one. Interesting. So there's almost 80 billion in Solana right now. Man, I gotta step my game up when it comes to crypto.
Guaranteed income every month or maximum growth on your money and figure out what appeals to you. Once you do that, then you can decide if you should take an
Okay.
annuity or
Nice. Are you serious? Did you buy a lot when it was $8? Dude. Dude, you went from $8 to 169 and even higher? That's the dream, bro. That's the dream.
annuity is another benefit. So you really need to assess your if you should take an annuity or just invest in the market and see how it grows.
I think I'm going to clip the end off of this, but we'll see.
Just invest in the market and see how it grows. I'm coming in from an would put into an annuity. There are a lot of annuity absolutists out there. Some people say you definitely need absolutists out there. Some people say you. Some people say you. People say you. Some people say you definitely need one for retirement. Some people say you definitely don't. I think it actually depends on the type of person you are. If you're very responsible with money, the money you would put into an annuity would likely grow far beyond what an
All right.
annuity would pay you.
I'm into NFTs. Are NFTs the like the digital art? Like it's like a you own one of that digital art?
Given enough time in the market. But an annuity is for a very specific person. If you have high levels of
I don't mean to ask anything political or upset anybody in here, but did you buy any of the Trump NFTs? Those made a lot of news.
and you need guaranteed income every month, an annuity is good for you. If you also happen to be irresponsible and can't control your spending, then knowing you have monthly income coming in from an annuity is another benefit. So So you really need to assess yourself what matters to you, guaranteed income every month or maximum growth on your money, and figure out what appeals to you. Once you do that, then you can decide if you should take an annuity or just invest in the market and see how it grows. Some people say you
How?
definitely need
So I'm assuming there's like an NFT market. So if you own NFTs and you wanted to sell them now, there's a place to exchange them.
for retirement. Some people say you definitely need one for. Some people say you definitely need one for retirement. Some people say you definitely need one for retirement. Some people say you definitely don't. And I think it actually depends on the type of person you are. If you're very responsible,
Magic 810 sword.
with
I like
money,
that.
the money you
Do
would
you think
put
they'll
into
come
an
back?
annuity would likely grow far beyond what an annuity would pay you over time, given enough time in the market. But an annuity is for a very specific person. If you have high levels of stress and anxiety and you need guaranteed income,
I think I'm
every
gonna
month,
chop it all the way to
an annuity
here.
is good for you. If you also happen to be irresponsible and can't control your spending, then knowing you have monthly income coming in from an annuity is another benefit. So you really need to assess yourself what matters to you, guaranteed income every month or maximum growth on your money, and figure out what appeals to you. Once you do that, then you can decide if you should take an annuity or just invest in the market and see how it grows. Or money and figure out what appeals to you. Once you do money and figure out what appeals to you. Some people say you definitely need one for retirement. Some people say you definitely
Games with Kai. I'm doing well. How are you?
type of person.
I'm making clips right now. Once alt season hits. Ooh, tell me more about it, Kai. Now my heart is tingling.
If you're very responsible with money, the money you would put into an annuity would likely grow far beyond what an annuity would pay you over time, given enough time in the market. But an annuity is for a very
There we go. I found my cut.
the money you would put into an annuity would likely with money. The money you if you're very responsible with money, the money you would put into an annuity would with money. The the money the money you would put into an annuity the money you would put into an annuity would likely grow far
Ooh,
beyond
how's it feel? How's it feel, Kai?
over time,
How long ago did you do that?
given enough time in the market.
You've probably already noticed a little bit more. They might not have paid interest, but you might be noticing some more already.
But an annuity is for a very specific person. If you have high levels of stress and anxiety and you need guaranteed income every month, an annuity is good for you. If you also happen to be irresponsible and can't control your spending, then knowing you have monthly income coming in from an annuity is another benefit. So you really need to assess yourself what
I love that, Kai. So you took it out of a bank account and moved it into a higher yield savings account. After your first month, when you see the difference in what they pay you, you'll be like, nice. That's awesome. I'm so glad I did this. Go throw this out. Be right back. And we're back.
matters to you, guaranteed income every month or maximum growth on your money, and figure out what appeals to you. The money you would put into an annuity would likely grow far beyond what an annuity would pay you over time, the money you would put into an annuity would likely grow far beyond what an annuity would pay you over time, given enough time in the market. But an annuity is for a very specific person. If you have high levels of stress,
I invested in a fund. It's not a big investment. It's more of a trial fund for a long-term fund. What fund did you get into, Kai?
Guaranteed income every month, an annuity is good for you. If you also happen to be irresponsible and can't control your spending, then knowing you have monthly income coming in from an annuity is another benefit. So you really need to assess yourself what matters to you, guaranteed income every month or maximum growth on your money, and figure out
Multi-asset income fund.
the money you would put in.
I am not familiar with that one. No, let's take a look. ALFM. This, that pretty girl mantra, this, that flaunt, you just touched down in LA. Which fund did you get into? Oh, wait, you told me. AMF Global Multi-Asset Income Fund. How do I... Mixed assets, here we go. Global Multi-Asset Income Fund. Which one did you do? PHP or USD? Just click in USD. We'll take a look at it. It's a BlackRock fund manager. All right, PHP. I'm going to look at that one then so we can be on the same page. So because it's Philippines, it's going to be a little bit different for me to talk about it, but early redemption fee, whoo, 1.5% management fee. That's a really high management fee, really high management fee. Wait, I'm going to look at their objectives here real quick. So a couple things to consider here, Kai. What account did you put it in? Was it a retirement account, a taxable account? Because like the reason I ask is here in America, if you put that in a taxable account, every month or quarter that pays dividends, that dividend gets added to your taxable income for that year. So holding dividend funds inside of taxable accounts in America is not tax efficient, and I'd recommend you move that into a tax advantage account like a 401k or an IRA. But I don't know what you have access to in the Philippines, and I don't know the tax treatment of these investments. Stable stream of dividends and generate long-term capital growth. Okay. So just something to think of there. The cost is very expensive. I don't know what you have there, but 1.5% is a big fee. Big fee.
Allow you to do that, but an IRA generally offers you a lot more flexibility on what you can invest in. There's a lot more tools generally for IRA income than 401k.
Yeah, so here, to give you an example, like look at, so this is global multi-asset. So let's do this. This is not going to be precise, but let's look at a global income fund from Vanguard. Global income. I'm just gonna search this here. Global Wellesley Income Fund. So let's take a look at this. overview. So this one is a 0.44% expense ratio, which is still pretty high, especially for Vanguard, but that's more than 1% less than what you're paying on this one. So just something to consider there. And the other thing you want to consider is, why do you want a fund that pays dividends as opposed to a fund that's targeted for growth? Most people generally look at income funds for two different reasons. Retirement. They're in retirement, so they move a lot of their assets into an income fund so they can live off of the income. A lot of younger people are just looking for growth, right? So they want equity funds that are going to grow. So if it's for retirement right now, all right, so think of it two different ways. If you're in a dividend fund, it's going to generally have slower growth, but it'll pay dividends, which will buy more shares, which will produce more dividends, which will buy more shares as it goes. But you're going to generally see a less vertical growth chart than if you were to buy, say, like a total stock market index or a total world stock market index. So just think about that, because then that'll grow faster generally and more, or at least over time it'll grow more, right? So you'll see their charts kind of doing this. And then when you get to retirement, that's when you'd want to look at switching it into like an income producing fund so that you can live off of that income. By getting more growth now, you can get more income later.
Got to think about how I want to word this. Tried speaking with a financial advisor. Told me I didn't.
Thanks, Guy. I do feel that was one of the gifts I was given, and why I wanted to do this. I think a lot of financial advisors get caught up in how they explain things. They explain things like textbooks. Yo, thanks for the sub. I appreciate you. All right, let's see here. I think I'm about to get to a commercial.
Can't afford this. This is where free advice guy comes. I just want to charge you assets under the financial advisor, and they told me I didn't have enough money for their help. This is why we created free advice guy. Most financial advisors want to charge you assets under management, a one-time fee, or an hourly fee, and a lot of people, especially early in their financial journeys, can't afford this. This is where free advice guy comes in. You can come talk to me live on stream for free and ask any questions you want. If you like it, you support the mission, and you want.
Yo, all right. 3 months of Discord. Discord Nitro. That's what I'm talking about.
To contribute financially, there's a Patreon where we can continue to build on your financial success. So if you're looking for a free entry into financial advice with a certified financial planner professional, free advice guy is your guy.
All right. Let's see how that commercial looks.
You support the entry into free advice guy is your guy. Free advice guy is your guy. Any questions you want. We created free advice guy. I tried speaking with a financial advisor, and they told me I didn't have enough money for their help. This is why we created free advice guy. Most financial advisors want to charge you assets under management, a one-time fee, or an hourly fee, and a lot of people, especially early in their financial journeys, can't afford this. This is where free advice guy comes in. You can come talk to me live on stream for free and ask any questions you want. If you like it, you support the mission, and you want to contribute financially, there's a Patreon where we can continue to build on your financial success. So if you're looking for a free entry into financial advice with a certified financial planner professional, Free Advice Guy is your guy. I tried speaking with a financial advisor, and they told me I didn't have enough money for their help. This is why we created Free Advice Guy.
Boom. Clip. It's going to be a commercial. Thanks, Guy. Have a good one, man.
Lower their taxable income. 20 years old, no debt. That's great. Got $100,000 at 20 years old. This kid's doing awesome. Feeling inadequate with my current financial situation. What can I do to change it? Changing your financial situation is one thing. Getting a new job, lowering your expenses, things like that. But you also need to go through the 5 steps of financial success. Begin. Budget, emergency fund, goals, investing and saving, and navigating your life changes. So get a budget, detailed budget with every dollar coming in, coming out. Emergency fund, I like 12 months of basic living expenses, but you can be more or less conservative depending on the nature. Goals with specific dollar amounts, time horizons, and risk tolerances. And then the fun begins. We start investing and saving toward those goals. And as your life changes, you navigate and update your financial plan. If you have all of this information down on paper, it can really give you a good idea where you actually stand financially.
All right, let's give it a check. Is this a good clip?
Really give you a good idea where you actually stand financially. With specific feeling inadequate with my current financial situation. What can I do to change it? Changing your financial situation is one thing. Getting a new job, lowering your expenses, things like that. But you also need to go through the 5 steps of financial success. Begin.
Do you have any advice for how much money you should allocate of money budgeted towards investing to a Roth IRA versus a brokerage account as you progress through life? Yeah, this is a really good question, CB. So you want to look at your overall income. You're going to hear less than some people say as low as 10%. You need to be saving 10% a year for retirement. I actually like 20% per year. And with that, you want to allocate, right? So if you're making 100 grand a year, you want to be saving 20,000 a year towards retirement. So with that, it's not necessarily an amount. I would max out. All of this has to do with your tax situation as well. So there's a lot of assumptions baked into this, but you actually want to have all 3 buckets. Ideally, you'd have 33% in like a traditional IRA, 33% in a Roth IRA, and 33% in a brokerage account, because we don't know what tax codes are going to be when you retire. But if you have all 3 buckets, you can take distributions from each account in a tax efficient manner to pay less taxes and maximize your after tax returns. So, but generally that's not how it's going to be, because the Roth has such a low amount that you can contribute compared to a traditional and unlimited investment account. The most important thing is that you have funds allocated towards those specific goals. So you don't necessarily need to target percentages towards each account type. It's more about the total that you have at that point. You can make it work even if you had 100% brokerage account, 100% Roth, or 100% traditional. Those can work as long as you understand the potential valuation difference needed at the time you want to retire.
Budget, emergency fund, goals, investing and saving, and navigating your life changes. So get a budget, detailed budget with every dollar coming in, coming out. An emergency fund, I like 12 months of basic living expenses, but you could be more or less conservative depending on your nature. Goals with specific dollar amounts, time horizons, and risk tolerances. And then the fun begins. We start investing and saving toward those goals. And as your life changes, you navigate and update your financial plan. If you have all of this information down on paper, it can really give you a good idea where you actually stand financially. Feeling inadequate with my current financial situation? What can I do to change it? Changing your financial situation is one thing. Getting a new job, lowering your expenses, things like that. But you also need to go through the 5 steps of financial success. Begin. Budget, emergency.
We're going to go with that one. Let's go. This that pretty girl mantra, this that flaunt, you just touched down in LA. All right, well, this is going. I'm going to check if TikTok responded to my inquiry. All right. Oof, it's too long. TikTok has not responded.
got bubbles on his tires, and he was surprised they exploded. To give you some background, I've been a certified finance in chat. One of the things I do every day, thanks for the follow. As I'm gaming, then I create clips from this. Burn. So the first take notes. You can also depend it on you and actually where most people run this properly. 10 years puts you in a weird place. Years growing. You have to wait for zero sleep, and I would. If you just throw it closer to. Not very clip friendly. Let's say I'm a 3 on that scale as I described. You're very comfortable with the wild swings in the market percent. Are you gonna sell? React, and you want to think about that. So if the market for this, let's swing back. Sorry, I got totally sidetracked for high cost of living area.
I got a commercial here. I got a clip from Tuesday.
Hey, my wife's family is in Mexico. What part? Mexico, potentially. I would lock it. Yeah, my family's near Juarez. The family walks across, they pick them up. I end in just the risk. Your goal is probably worth it. So you're gonna get married. Are you guys gonna be dinks? What's in your head now?
It's from our conversation from Tuesday, CB.
Hit a budget. Understand wherever. Not living down in Mexico, you might. Stays at home, you lose it. I see. The rough plan was that I would work remotely, preferably from. One thing, CB, and I have experience with a handful of companies myself, and as you're looking for valuable in America, you're valuable everywhere, baby. Things on the boards to go over here.
I thought I created a commercial thing.
My current situation, $10K is allocated towards building tuition, but I'm saving investing. Market move. VUG. He used to grow. Talk about why his funds. You'll be very happy you're overexposed to them. But if they begin to underperform the overall market, it's going to feel bad. Right? So I generally like owning the entire market if I'm going to feel that even more. less likely to outperform in the long term?
This must have been where the wife came home with the kids.
Next 30 years? I don't think so, but it is possible. But when it comes to sectors, so now you'd be doing the same thing, right? If you own VTI, those things, you can make those. But I'm going to bet that they are in a diversified portfolio. If they have or so, I'll probably start gaming. I'm going to be soccer.
Apparently, I text my wife on Friday the timestamp of something.
Bonds will not appreciate that. It's just 1% bonds. Hey, look. Should I sell SCHD? Much money does it have around 40 shares of SCHD in my Roth IRA? Thinking about selling my shares and investing more into this. Well, this isn't an IRA. That's fine. We're talking about SCHD. That question pops up.
I did. It was on 10/24. A week ago. All right, I gotta go back to Thursday's stream. It looks like okay. Is it Valorant time on this stream? Yes, it is. All right, let's go back to free advice guy. Let's go to videos. This that pretty girl, Mantra, this that blunt. She just touched down in LA. Thought I clipped everything from this one. Got that. Got that.
Is up, chat.
Get down! Get to the chopper!
I'm a goof, bro.
That sounds beautiful, man. I wish and hope and dream that for you. Go to personal finance.
What do you think about investing in precious metals? Ah, all right. This is a fun conversation here, CB. So it depends on what you're investing in them for, right? So that would be my. Give me one sec. I gotta. All right. So, are you investing them for massive growth? Because that's not generally been the history when it comes to precious metals. Are you doing it as a hedge against inflation? That could be good, right? I have no problem with metals. I actually invest in a little bit of metals myself. There is a fund. I'm not recommending this fund. There could be better, but CEF, which is physical gold and silver, I invest in a little bit in this. But it's not much. I think it's like, I don't even know if it's 5%, to be honest with you. But I do have a little bit of metals. But look at this. Year to date. Whew. Year to date, this gold and silver trust is up 34%. So it all depends on why you have it. I just have it as kind of like a hedge against inflation and more diversification in my portfolio. So I like to have some metals, real estate, stocks, a little bit of bonds, cash. But the cash is there for me to make moves should something happen. Yep. Yep. For that reason, I got no problem with it. I got no problem with it.
I drink, that's right. He'll come in, I haven't spoken to him in 6 months. I'm not going to clip this or anything, but paying for cash, does it have any real financial benefit? Look, you're going to have people who talk about zero, like, oh, I got 0% on this financing, so I'm gonna finance it out for 12 months. Alright, what'd you do in that 12 months with that money? Did you have it sitting in a high yield savings account? Was it in the stock market? Man, that 30 days just happened to blow up.
But it might not. That's the other thing too. It doesn't necessarily work as a perfect hedge. So you just have to know these things.
We can make everything perfect. Now, BlackRock or any of these big companies for this blasphemy. Okay. I have built a decent savings and retirement account in order to make a substantial amount of 2 years, okay. Not get her money management skills to maximize my return on investment. Thanks, everyone.
Sometimes I get goofy, CB, just so you know.
Comfortable with this to maximize return. You are now. All right, money. Didn't do anything like this still. Let's read that correctly. 30,000 in a family taxes, but accomplish something. It's a financial success, brother. 5 steps. Begin, budget, emergency fund, goals, investing in savings, and navigating your life changes. If you follow those 5 steps to financial success, you may just find financial success. I'm possibly chatting live right now. Come in, ask your question. Let me help you out with your finances.
All right, let's see if that works as a commercial. I don't think my head is big enough in this.
Owing money. 5 steps to financial success, brother. 5 steps. Begin, budget, emergency fund, goals, investing in savings, and navigating your life changes. If you follow those 5 steps to financial success, you may just find financial success.
Nope.
I'm possibly chatting live right now. Come in, ask your question. Let me help you out with your finances. Help you out with your finances. See? Out with your finances. Saving and not blowing money. 5 steps to financial success, brother. 5 steps. Begin, budget, emergency fund, goals, investing in savings.
Discard clip. Not good enough. Not good enough.
You ever an income? Me and my employer 401k. Just as taxable. Nothing there. They're guaranteed payments like an annuity.
to 5 years. Nope, 200,000. Why? With that said, I feel like we're personally in an okay position for retirement. My plan right now is to keep on maxing out my Roth IRA while keeping our 401k contributions as is. Not maxed, just employer matched. So, okay. Why? I was hoping to max out my wife's Roth IRA too, but if we tried that, we might struggle to save up, and her returns wouldn't be as great since she has barely any in it for now. Okay. We live in a very high cost of living area, and we're planning to save up at least 50,000 for a down payment. Ideally, we want to save money around 60 to 75. Since closing costs are roughly two. Okay. Not contributing to both our Roth IRAs would get us there easy. A house is a very big, important decision for someone's life. Where you live, all that sort of stuff. Those things are critically important. All right, CB. I do have a story. I wouldn't necessarily call it cool. Give me a second. I'll tell you it. All right. We can go to, let's go to my first mistake. So I got into the finance world in 2011, and I thought I was very smart. And before 2011, we had the 0809 crash. And when the stock market recovered and went back to its high, I thought I was smart. And then I sold my stocks thinking it couldn't go any higher. Well, it of course went higher. I think the stock market, or the Dow at least, was at like 15,000. And I sold out thinking it's going to go down again and I'm going to buy. And it just kept going up. So I reinvested at like when Dow was at 20,000. So I missed out on 20% gains there thinking I was smart. So that was one big lesson. Another lesson, there is a fund, or was a fund, called the Precious Metals and Mining Fund at Vanguard. It peaked at $48 per share. It fell all the way to like $6 or $7 per share. I bought it at $8 per share thinking even if it doesn't go back to its all-time high. Wait, my mic is muted? It shouldn't be. Okay. Whew. So did you hear that first? You probably didn't hear that first story, right? So I got into finance in 2011. The stock market, that was after the 0809 crash. So the stock market recovered to pre 0809 crashes, and I sold out thinking it was going to crash again or not go higher, and it went higher. So from when the Dow was at like 15,000 to 20,000, I was not invested, and I reinvested again at 20,000. So I missed out on 20% gains. Thankfully, that was early in my life, but I'll never be able to make that up. Early in my investing life. So that was one mistake. Another one was the Precious Metals and Mining Fund that Vanguard had. Its peak value was $48 a share. It had fallen all the way to like $6 or $7 a share or something like that. So I bought it at $8, thinking even if it doesn't get back to its all-time high, it's got to get to at least 50%. So I'm going to get a 300% return. And instead, that fund ended up getting absorbed into another fund. I think the Capital Markets fund that Vanguard has. So I never made good money on that investment. And then my most recent one is a company called, I forgot what they're called, U-Time, but it's WTO. They went from like $2 one day to like 10 cents. They lost 96% of their value in a single day. And I bought thinking same thing, like, wow, it was, this looks like a real company. Hey, what's up, Nicole? this looks like a real company, and it went down crazy in value. So I bought it at less than 10 cents a share. Um, and I think it was 8 cents a share is when I bought it. Thinking, man, even if this thing only goes back to $1, I'm gonna make a killing. And it's actually gone down even more. Thankfully, I only invested in that what I was willing to lose, but I've lost like 50% on that. I've lost like $500 on that. So those are some stories. If you have anything more specific or more targeted, I could definitely do that.
Stove, but I have not. Ladies and gentlemen, the answer to this question is, it's not too late. You got more to save. You got to do more per year. Yeah, I like loans, 98,000. Yeah. So the answer is for this, it's not too late, but you have to save more. You really got to be focused on your plan. You put quite a bit away. All right, we're doing a Dr. Pepper Zero. Dr. Pepper Zero.
There's some of that goofiness. All right. My family just got home. If you would give me a few minutes, I'm going to go say hi. Be right back. And we're back. This that pretty girl mantra, this that flantra just touched down in LA.
Brother was born on the 4th of. You can pay off your mortgage. People looking. Yeah, it's fine. So true. We don't understand this. It's yearly interest rate. Okay, take out 200,000 if two, the one with like the 2 bar, or do you actually hit it with the 2? How short do you keep it? Believe it or not, I used to keep everything 1 inch. Every single, except for the mustache. So to be a beard, you're, for a while, did go to the. I'm gonna be straight with you. I don't fully understand how everything works together. The other thing is, ad is a little bit frustrating. TikTok stream, I got 2. What is the best thing? Just throw it in the target retirement fund. Throw target diversified. Years old, buddy. I don't know how. Dude, do you imagine? Imagine you were doing this website. 80% pay go down. There's how to stay disciplined. Make your payments, your extra payments. Get that debt paid down. All right. Pay go down. If so, this is something you should definitely consider. But you're really just taking new debt to pay old debt. So you really have the same amount of debt. So you really need to be in a better position afterwards if you're going to do this. And you gotta stay disciplined. Make your payments, your extra payments. Get that debt paid down. I Wimsel. Shield spam. That's what I'm. It's left 400. It's 48. Probably invest. There's no final question here, buddy. But really, you make a decision on what to invest in with specific dollars. Before you can start investing and know what you want to put your money into, you need to have a budget, an emergency fund. After we look at Richard. It was a great time changing your life. All right, back to free advice guy. Go into a topic. I could be live right now. I need to get more videos that drive people to what I do here. But we got some good ones coming. Got some good ones coming.
like my SEO could be pointed. That's gross. Yeah. Thing to figure this out. $75,000 high yield until after the election. I like 12 months. It's more important. We can talk money. We can talk. Give and call. So many questions. Getting the 401k. All right. Starting to play 14%. 6%. I'm sick, I'm not gonna lie. Sounds like Vanguard. Vanguard had great retirement benefits. I'm also getting a higher bonus this year, and it's looking like it'll be 15%, which is around 11,000 before taxes. I can use my bonus and put it. Traditionally, you're not being taxed right now on that money. It's going straight, assuming you to consider it traditional. I might be live right now to answer any questions you might have. Come find me live. Let's chat. Taxes are whatever your tax rate is now. You're going to pay that on that money, and then it's going to grow. Yes, there's actually 3 stories. So I'll ask you: do you want to know more about a bad overall investment decision I made, an investment decision on one mutual fund, or an investment decision on one stock? It was actually 3 different stories, CB. Going to take distributions tax-free, assuming you qualify for some rules there. So you got to decide, do you want to pay the tax now or do you want to pay the tax later? If your taxes are lower now, then it makes sense to consider a Roth. If they are higher now, it makes sense to consider a traditional. I might be live right now to answer any questions you might have. Come find me live. Let's chat. All right, I'm going to be goofy with that one. Let's go. Now, then it makes sense to consider a Roth. If they are, consider a traditional. I might be live right now to answer any questions you might have. Come find me live. Let's chat. Come find me live. Let's chat. You take distributions tax-free, assuming you qualify for some rules there. So you got to decide: do you want to pay the tax now or do you want to pay the tax later? Decide: do you want to pay the So you got to decide: do you want to pay the tax now or do you want to pay the tax later? If your taxes are lower now, then it makes sense to consider a Roth. If they are higher now, it makes sense to consider a traditional. I might be live right now to answer any questions you might have. Come find me live. Let's chat. So you got to decide: do you want to pay the tax now or do you want to pay the tax later? If your taxes are painful, ooh. Wow. It's actually a really hard thing to answer. All right, I'm going to cover 2 of them. So my first one, I got into the finance world in 2011. That was after the 08-09 crash. And once the market recovered to pre-08-09 crash levels, I sold out thinking, boom, we've reached the top again. Market's going to go back down. I'll buy in again and ride it back up. And instead, the Dow was around 15,000 and went up to 20,000. Or 18,000? Yeah, I think it was 18,000 before I jumped back in. So I missed out on 20% growth because I thought I was smart. So I put money back in at 18,000. So that was one lesson, that timing the market is bad. But it wasn't my final lesson on timing the market, CB. Another one was a fund called the Precious Metals and Mining Fund. It wasn't actually a metals fund. It was a mining companies fund. But either way, it peaked at $48, and I saw it, and it was like $7 or $8, and I was like, wow, what a dip, like 80+% dip. I'm gonna buy this because even if it only goes to 24, I'll triple my money. So I bought into that, hung on to it for a few years. It barely did anything. And then that fund ended up getting absorbed by another fund altogether. So I learned there that sectors and specific investments are very difficult to time and know what to do. So I decided from that point forward, I'm never doing it again.
I worked at Vanguard for over 13 years.
You.
Yeah, you. I could.
All right.
What if I do something goofy like this?
Hey, you.
Yeah, you. I could be live right now answering your financial questions. I'm a certified financial planner professional since 2014. I worked at Vanguard for over 13 years. Now I'm trying to change the world by answering financial questions for free. So join me at any platform you like. I'm free advice guy.
I don't know. That was kind of weak. Let's see if we could turn it into a commercial.
I could be live right now. Now I'm trying to change the world by answering financial questions for free. So join me at any platform you like. I'm free advice guy. This. At any platform you like. I'm free advice guy. This. Alright, Archangel, what if I do something goofy like this?
Hey, you.
Yeah, you.
Hey, you. You. Hey, you.
Yeah, you. I could be live right now answering your financial questions. I'm a certified financial planner professional since 2014. I worked at Vanguard for over 13 years. Now I'm trying to change the world by answering financial questions for free. So join me at any platform you like. I'm free advice guy.
Hey, you.
What a goofy clip.
Alright, let's see. Let's see how that is. 1 hour, 49 minutes.
And then I'll tell you one more mistake, CB. I'm sure I could think of more when it comes to investing, but I'm pretty much been in the buy the market, ride the market for a long time now. But so everyone always asks me like, "Hey, what stocks do you own?" And I'm like, "Oh, the whole world stock market, right?" But I never have an actual story when it comes to an individual stock. Ooh, biggest win. All right, I'll get to that in a second. Let me finish this one and I'll tell you that. So, I decided I wanted to buy a stock so that I could share a story about an individual stock with people. So there was one day, this wasn't that long ago, month and a half, I don't know, a company with the ticker symbol WTO. You can look them up right now. They went from $2 down to like 8 cents. They lost 96% of their value in a single day. And it looked like a legit company. They released some good news recently, so I I followed, or I decided to buy in, and thinking, man, even if it doesn't get back to $2, it could go back to $1 or anything like that. But if you look up WTO right now, I think it's worth 4 cents, and that's after they did a reverse split. So really, it got down to 2 cents. So I've lost like $500 on that investment as well, just so I could have a story to talk to people about how difficult it is to time the market. So the biggest win of my career, this is boring. This is honestly boring, CB. My biggest win was buying and holding the total stock market index for 13 years. It's so boring, man. But the best decision I ever made was realizing I am smart enough to know that I'm too stupid to know what the stock market's gonna do. So with that, just buying and holding my positions. That's honestly been the biggest win of my whole career. If we're talking about individual trades, yikes. I don't even think I have one where like I bought something on a whim and it turned around and did well. Let me actually CEF, I guess, but even that I don't even know. Let me check my portfolio here real quick. Got it. Let's check out my portfolio, see what positions I hold. That's not it. Definitely not that one. Let's see here. Yep, sitting on the ETFs is the way to go, man. It's not that you can't make more money. Yeah, my whole portfolio is so boring. I own very little. So in my 401k, one of the things I own, and you can own this in a Vanguard IRA as well, is something called PrimeCap. So I own the PrimeCap fund as well. That's an active fund through Vanguard. That's it. I own that in my 401k. That's like the only fancy thing I own. How do you personally feel about international stock taking off in the coming years, decade? I believe it will happen. So leading up to the 08-09 crash, international stocks were outpacing domestic stocks. And it had been doing that for, 5-6 years. And then since the crash, we've inversed. So it's been like 15 years straight of domestic dominating international. At some point, international will take off. I just don't know when that is. The thing that worries me is I think the international economy is terrible. So we need to get the world economy better. But at some point that'll happen. At some point they'll flip. At some point international will be there. So I own something like 70% domestic stocks, 30% international stocks, something like that. It might even be 80-20. But I definitely have international to diversify more and to pick up on those wins later. Because if you look at it from a buy low, sell high, for the last 15 years, it's been a good time to buy low on international, assuming they take off one day. Man, I was goofy during this stream.
Have no savings, pay that amount, about how much interest you're paying every month. Buy this guy's 2017. This dude is full of shit.
ETFs more than crypto? Really, you like crypto more than individual stocks? I'd have to really think about how I feel about that, Soft. I'd have to really think about it. Do 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 do.
Lots of hobbies, interested in the area for at least 3 years. Hey, but little to no replacement.
Dude, I was so goofy a week ago. What is this?
Growing, highly
I didn't even realize I was goofy when I was goofy.
just that. Throw a ton of money towards to this. Money answers payments as they can. Pay it off when they can. No big deal. Then you got people like me who hate having debt. I don't like having debt at all. It doesn't, even though it's a low interest rate and all that, bothers me. I just owe somebody money and I don't like it. So a lot of it depends on who you are. Also, I could be live right now. Live stream me right now. Answer your questions live. Get in here. Come talk to me. Ask me a question. Let me help you with your finances.
Boom, commercial time.
Hate having debt. I don't like having debt at all. It doesn't, even though it's a low interest rate and all that, bothers me. I just owe somebody money and I don't like it. So a lot of it depends on who you are. Also, I could be live right now. Live streaming right now. Answer your questions live. Get in here. Come talk to me. Ask me a question. Let me help you with your finances. With your finances. Pay it off when they can. No big deal. Then you got people like me who hate having debt. I don't like having debt at all. It doesn't, even though it's a low interest rate and all that, bothers me. I just owe somebody money and I don't like it. So a lot of it depends on who you are. Also, I could be live right now. Live streaming right now. Answer your questions live. Get in here. Come talk to me. Ask me a question. Let me help you with your finances. Pay it off when they can. No big deal. Then you got people like me who whatsoever. It doesn't stress them out at all. They carry 50,000 in debt, making the payments as they can and pay it off when they can. No big deal. Then you got people like me who hate having debt. I don't like having debt at all. It doesn't, even though it's a low interest rate and all that, bothers me. I just owe somebody money and I don't like it. So a lot of it depends on who you are. Also, I could be live right now. Live streaming right now. Answer your questions live. Get in here. Come talk to me. Ask me a question. Let me help you with your finances. To this, feelings answers to this, but every answer depends on you. It's going to depend on how you feel carrying some debt. Some people have no problem whatsoever. It doesn't stress them out at all. They carry 50,000 in debt, making the payments as they can and pay it off when they can. No big deal. Then you got people like me who hate having debt. I don't like having debt at all. It doesn't, even though it's a low.
It's possible, Soft. There's a lot of factors in there, though.
I just owe somebody money.
Same level as gambling.
A lot of it depends on who you are. Also, I could be live right. Oh man, there are paper answers to this, money answers to this, feelings answers to this, but every answer depends on you. Oh man. Oh man, there are paper answers. Oh man, there are paper answers to this, money answers to this, feelings answers to this, but every answer depends on you. It's going to depend on how you feel carrying some debt. Some people have no problem whatsoever. It doesn't stress them out at all. They carry 50,000 in debt, making the payments as they.
Ah, I love this, CB. You're getting somewhere. I'm torn on thinking these American companies will just continue to globalize, and therefore domestic companies will dominate global markets and international companies growing to rival our big companies. This is an amazing point. All right, so this is actually where I swing differ from Bogle, Vanguard's creator. Bogle did not really think you needed international stocks because of what you just mentioned. Our companies are doing business internationally. So they have stores and locations and selling things in other countries. So that is international exposure. The thing is, though, do you really want to just cut out the world? I think there's, 4,000, 5,000 stocks internationally, not in the U.S. So Honda, Toyota, Nestle, things like that. Do you really want to not own these companies? So You want to add one more piece of that, CB. American companies are becoming more international. International companies are becoming more domestic. We are much more intertwined with each other. But again, there's got to be a time, and there might not be. There's no guarantees, but there's got to be a time where international stocks start outperforming domestic stocks. But everything, domestics become international, internationals become domestic.
Can and pay it off when they can. No big deal. Then you got people like me who hate having debt. I don't like having debt at all. It doesn't, even though it's a low interest rate and all that, bothers me. I just owe somebody money and I don't like it. So a lot of it depends on who you are. Also, I could be live right now. Live streaming right now. Answer your questions live. Get in here. Come talk to me. Ask me a question. Let me help you with your finances. Oh man, there are paper answers to this, money answers to this, feelings answers to this, but every answer depends on you. It's going to depend on how you feel carrying.
We're going with it. That's a clip. That's a clip.
Currently working federal grants compliance and given where. Lastly, I don't wish to. Please let me know if you need more information. Think they are more about your quality of life and your decisions is. Like it's a money question. It's probably.
But yeah, with crypto soft, the other thing too is the hedge. If the U.S. economy tanks, crypto will skyrocket in value. I just don't like that. It's not, at least when you're investing in stocks, you're investing in companies. When you're investing in crypto, it's like you're investing in nothing.
Of returns. Is that what you're telling me? We have about 5 weeks of return? Or on the flip, it's way too short of a time horizon. And hope the flat, but you will have made something. There are probably other markets undoing this, but thing in between is. The stuff I put in my beard and their hair. So yeah, you've had a good run then. You've had a good run with those companies. So we'll see what happens over the next, 5 weeks. But
I'm interested in researching into specific international markets that show promise. TSM, for example. I've always hesitated to get broad international stock for reasons I mentioned, as well as the principle of investing money into countries that entirely different economic and governmental structures that I'm so unfamiliar with. It's a great point, CB. This is where something like I think it's VXUS. It's the total international stock market. You could just own the entire international stock market in one fund and not really think about sectors. If you go to specific countries or specific sectors of the international market, you're just adding more concentration risk to your portfolio. So just think about that as you go. Also, CB, what do you think of that subscriber badge? Look at that. Bald, no mustache, no goatee, no beard. That might be my favorite subscriber badge.
now, if you're just trying to have some fun, nice. What a pop! Account you have that in? For long-term investment, what would you recommend? Like if it's actually for retirement, but for people who can't. So, got to see the kids before they left, and hoping to help people. So, Max, you do.
Yes, they do. Yes, they do. So I wonder if we could look back at a video. I relaunched on August 1st as Free Advice Guys. So before this, I was streaming, but I was just like a dude. Like, hey, let me give you life advice from a dude. But then with on August 1st, we relaunched to give financial advice online. So, and we ran into some things. Really, it's been about a month that I've been like really hardcore serious about this. I post clips. And CB, if you're ever bored and you just want to go watching, liking clips on social media, that would be tremendously helpful. Because, like, look at this. I'm just going to show you my YouTube here real quick. So, like, these views here, they sometimes, like, these are lower. But, like, if you look at, like, last week's, popping into the 400s. But some of them, I don't get the algorithm. 30 views. Hundreds of views. And I always got to call this out. My boy Soft made my very first clip here. 4,000 views. The very first one. This was a bad few days right here. But yeah, sometimes I get super low views. Sometimes I get into the hundreds. I really don't get the algorithm. I really don't. Like, look at my TikTok. This is kind of wild. My TikTok, look at these views. I do not know how to get into this algorithm, man. TikTok's algorithm blows my mind. But then look at this. Randomly, 80. Okay. And then randomly, 636 views. I don't know. 200 views. They just like randomly popped, but I don't know, man. Don't know. I kind of want to switch this back to a business account instead of a personal. Because right now this is listed under like a personal account. I think I want to switch it to a business account. Get rid of these. I'm trying to soak up as much knowledge as possible. I love it. I love it, CB. And then if you ever run into somebody who needs help, you can send them that playlist. Like, boom, here you go. This will take you about 30 to 40 minutes to run through all these videos. And you will be much smarter about your finances after. The problem is, as you get smarter about your finances, you realize how little you knew before. Then you get more and more questions. But it's nice. After working with somebody for, a year or two, they're pretty good. They're kind of on autopilot when it comes to their portfolio.
Have to come back and you have to tell me how this went when you're done.
Crypto coins that usually succeed are the ones that pay out dividends. There are crypto coins that pay out dividends? I didn't even know they did that.
That would be possible. Yeah, there's maybe like 8,000 max. So I'm about to hit the 5 steps for financial. Kind of teach you about how difficult it is to actually pick losers and winners. To invest in the lost value. steps, a lot of the things you need to do financially become a lot easier. Hey, I could be live right now answering any financial questions you have. Come find me.
What does
live,
staking
ask me
crypto mean? Relapse?
with your finances.
All right, we got another commercial here. Let's go.
Years old, live, ask me a question. Let me help you with your finances. Help you with your finances. At 20 years old, you got to go through the five. Do with 20,000. What to do with 20? What to do with? What to do with 20,000? What to do with 20,000 at 20 years old? You got to go through the 5 steps of financial planning. Begin. Budget, emergency fund, goals, investing and savings, and navigating
Yo.
life changes. Once you go through those steps, a lot of the things you need to do financially become a lot easier. Hey, I could be live right now answering any financial questions you have. Come find me live, ask me a question, let me help you with your finances. What to do with 20,000 at 20 years old? You got to go through the 5 steps of financial planning. Begin. Budget.
When you
emergency fund,
lock up
goals,
your crypto
investing
for
and savings,
validators or
navigating
liquidity
life
pool,
changes.
you get a return.
Once
Really?
you, go through
Do you
those
have to
steps,
give up any
a lot
shares
of
or anything like that? Like, is it pretty risk free?
All right, what do you think of that, Max? I'm gonna make that a little commercial. What I just did there, possibly by the end of this stream as well. Say, Julio, but I believe you're making a bet that that sector is gonna do better. Bitcoin's going to 1 million. That's why when you got, but what do you mean? Think about it. You're talking about. Here, it's around a long time. It's really difficult to know.
Soft, did you see my controversial tweet?
What companies just own something? Information technology used to be the top dog. Certainly, European City. There's AI chip trying to be. It's a matter of time. Max, let gold for the. Some gold should. Not that I'm opposed to it. But gold
It all has risks. Crypto is volatile compared to traditional markets. But if you stake it, so what does that actually mean? So you stake it for validators or liquidity pool. So you stake it, and then is it potential you could lose it while it's staked? I know the value could change, but
are
stake is not too risky if it's not locked up too. All right.
with a little ignorance and a little faith, and everything is gonna be fine. Prime Minister tried to kill him.
Agreed, soft. Agreed.
The war would affect world prices.
I was scared I was gonna wake up today with
A lot depends
a bunch
on
of mean tweets,
everybody in the chat. Then what?
but I'm too small for anybody to notice.
Nothing is guaranteed. You may find out. Wait, what was nothing is guaranteed for soft? Democrats. I feel like a little bit weird. Clip. I think he's going to get more support from a bunch of different groups. Pay a fine. Alright, but nobody can look at it. Say rigged. You game it all, Ultra? Not gonna be back because I'm playing Valorant. Didn't look right. But I just care about everything on socials. That'd be great.
I still haven't sent those emails off to like Derek and all those people. All right, I think this clip is done. APR return on one of these coins that I'm looking at. What? How old is the coin? At some point that'll end. All right, so that's all of them. Let's close this. I should have made that. I just realized I should have made that a. Let's go back to past broadcasts. All right, so that was from a week ago. Pretty sure I did this. Yeah, making clips. I did that one. That one. I don't know if I did this one 6 days ago. Let's take a look. Oh, I'm not on cam here. We're not gonna do this one. All right, I'm all caught up on clips. We might be at the Valorant portion of the stream. Yeah, you push it. Yeah, you push it. I had 10 people engage with my live stream on Twitter today. Nice. All right, let's turn off screen capture. Welcome to Circuit City, where service is state of the art. All right, took care of that. All you have to do is just meet me at the Pate Apate. Pate Apate. Let's get logged in, shall we? this going. Let's play some Valorant, shall we? Hello, just followed you. By the way, I design eye-catching logos, banners, overlays, and emotes. Thanks, Jessica. I have all those, though. I appreciate you, though. How do I not have the donut buddy? About the battle pass, how... Don't matter. Whatever. Riz has no Riz.
Match found.
What's up, fellow gamers? I love that you're Cypher and a TDM. They're going to be mad. Ah, 90, I suck, bro. What? What a flick. Bro, fight! Fight!
It's a TDM, my guy.
Oh, Oh, we trying to lose? All right, my bad.
Revealing area.
That's what I get. That's what I get. No shot. I suck. He gets me?
Shot down. Scanning ahead. There they are. Shot down.
I thought he was in the room.
Blocking sight. Wait for me. Grenade. Bomb buddy out. Four.
Bro. Cypher, that trip's like 10 feet in the air, bro.
Razor's elbow, just trying to draw a crosshair.
Down.
Here. One day.
Okay.
Defeated.
Get out of my way. Okay.
Shot down.
Grenade.
It's terrible.
Here comes the party.
Mm.
Revealing area.
No. One more.
Grenade! Here. Satchel out.
And Kick is nothing but spam chats. Nothing. Nothing but.
Match found.
Stand in my way. I dare you.
Reyna locks in. I lock in right after Reyna.
Kawasaki's are for gays.
They're for the best riders.
No, I'm just kidding. I ride an Aprilia now. Yeah, that's sick. How many CC?
That's not ready.
He was just ready for it.
Which gay Kawasaki do you ride?
Concourse, baby.
A what?
A concourse.
A cock course?
Nah, that's where I met your mom, though. Oh, snap! Oh!
On a cock?
Too late.
Ah!
Pitiful. Worthless.
Dude, there is no shot. why can't I shoot heads, bro? I suck.
Get out of my way.
Dude. One coming up left side.
Why are you gay?
Reloading.
Aye.
You are gay.
Just got running gun in the head across the map. That's crazy.
It's you and me.
That is gay.
Flash out.
What? This.
Dude, what is he doing down there? Dude, the timing!
Neutralized. Clearing out. Stopping fire.
Dude, just getting dunked on. Dude, it's not even first bullet accuracy.
Reloading.
Okay.
Reloading.
Vanguard not initialized. This is your first time playing computer. You need to reboot your computer to continue. Okay. Well, that is interesting. Let's see if we can do this again. Yeah, me neither. That was weird. Let's try it again. Connection error. Okay. I'm going to try one more thing. We're going to go into Task Manager. Close the Riot client. End task. Valorant tray notification. End task. Why is Xbox open? Try to open Valorant one more time. I can't really restart right now. Oh, I'm downloading something. Okay. Okay. Well, I think Valorant is having an issue. Of course. All right. I'm rating this kid because he's doing Harry Potter right now. Okay. All right, guys. I will be back tonight for our gaming stream. I will catch you guys in a little bit, and I hope you have a wonderful rest of your day, and I will see you tonight.